Good morning and welcome to this session of the live virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Today, we are going to discuss something interesting. Companies incorporated outside India. It's a separate chapter. Okay, they've given a separate chapter for this. Chapter 22 of the Companies Act 2013 deals with companies incorporated outside India. Okay, you're going to loosely say, oh, you mean foreign companies. Be careful, because as we go into this topic, you will see that there is a difference. There is a difference between a company incorporated outside India and a foreign company. I mean, this is law. Welcome. So you are no longer a normal person with normal dictionary meanings. So this law, the Companies Act 2013, is going to give you definitions, and you will have to know these definitions and understand them and apply them accordingly. I'll try to explain the logic as much as I can. I will do my best to explain the logic as much as I can, but then sometimes the Companies Act 2013 can be illogical. I mean, I'm not responsible for that. Okay, the fault lies elsewhere, but I will try to make as much meaning out of it as I can. Right. Of course, while all sections and rules are from the above two, we are going to deal with a couple of provisions from the first chapter, that is preliminary, where you might have already studied this. I don't know, but if you have not, right, we are going to again review these definitions because they are very relevant for this topic. Now, this topic is, you can divide it into two parts broadly. I mean, logically. Okay, logically, the first set of sections 379 to 386 and 392 and 393 are legal provisions relating to foreign companies. 387 to 391 very specific provisions relating to issue of prospectus by a foreign company. Okay, while I'm there, let me also, I'm a human being, I'm not God. Okay, so I will sometimes be using these two terms as if they are synonymous. Companies incorporated outside India and a foreign company. But there is a very, very important difference because they are separately defined. Okay, let's look at this and understand it. The word body corporate, I'm sure you studied it already when you studied preliminary, just to sort of refresh your memory. The word body corporate is defined in section 2, subsection 11. It says body corporate or corporation includes a company incorporated outside India. I'm not giving this section in full. You already studied it in preliminary. Therefore, you should know that specifically cooperative societies are exempted there, right? That's not relevant for this topic. What is relevant is that the term body corporate includes the company incorporated outside India under some other Foreign Companies Act. Okay, it is an entity with limited liability of its members incorporated outside India, right? To subsection 11, which is why whenever you are reading the Companies Act, be very, very careful. Are they using the word company or are they using the word body corporate? Especially, I don't know if I covered amalgamations, mergers. I mean, compromises, arrangements, and amalgamations. I think I did. In which case, I have made the distinction between the fact that these sections use the words body corporate and company clearly. For example, in an amalgamation, a transferor company may be a body corporate, but a transferee company should be an Indian company. Check out. You can go there and again study it. See, these are the subtle differences that you have to watch out for. Which means they've defined the word company in 2 subsection 20 of the Companies Act. They've defined the word company and they've said company means a company incorporated under this act or under any previous company law. Okay, loosely you can call it Indian company, right, sir? Loosely, though Okay, casually we can use the word Indian company, meaning a company incorporated under this act, the 2013 Act, or under any previous company law, not just the 1956 law. Of course, the 1956 law was there for a long time. Believe me, before that you had the 48 law. You had you had the princely states. There they had their own, some of them incorporated companies under their own charters, so on and so forth. Whatever it may be, if it was done under the Company Act 2013 or under any previous company law, it will be defined as company. For your information, there are many companies that are celebrating 200 years or 100 years, more than the company called EID Paris Limited, Chennai company, celebrated 100 years. I don't know exactly when, but they have completed 100 years. But the Companies Act 56 itself is not 100 years old. Yeah, hey, you have to wait till 2056 for that. So it's not 100 years old. But there are companies that are 100 or 150 years old. Reason, these are companies incorporated under previous laws, under the British period, whatever. Okay. So there was an Indian Companies Act. Indian Companies Act. There was an Indian company, I think it was 1922 law. There was an Indian Income Tax Act. Now, these were laws enacted during the British regime by the British Parliament for us. The British enacted laws for us, and so on and so forth. So, having said this, first I want you to clearly understand body corporate alag hai, company is part of body corporate. Company is part of body corporate. Body corporate includes a company incorporated outside India, but it definitely includes Indian company also. So when they say body corporate, they are using a wider term, which means both Indian company as well as company incorporated outside India. But if the word company is used, sirf company, then it is only Indian company. Are we clear? Now, moving on. Foreign company, the word foreign, whatever phrase, 2 words, foreign company is defined specifically to subsection 42. We'll come to that definition. Before that, a little clarity. Using Boolean or using set theory, which I love to do, there is a universal set of bodies corporating. There is a universal set of bodies corporate, which could include LLP. So, limited liability partnership is also a body corporate. It has its own separate legal entity shape. So, this area is the entire set that could have bodies corporate in it, blah, blah, blah. It could have cooperative societies also. So many entities are there. All are incorporated or chartered. And they have, see, what is basic concept of a body corporate? Going by the general definition. See, here it is an inclusive definition, etc. But what do you understand when I say body corporate? It should have separate legal entityship. Means it should have its own entityship, which means it can hold assets in its own name. It can sue and be sued in its own name. It can hold assets in its own name. It can sue and be sued in its own name. This is exactly where a registered or unregistered firm doesn't matter. Registration does not change anything. It's not a body corporate. Strictly speaking, it's not a body corporate. It is the person under the Income Tax Act, but not a body corporate. Whereas an LLP is a body corporate. Right? A limited liability partnership is a body because it gets entityship. It is separate legal entity. 2 qualities are it can hold assets in its own name. It can enter into contracts in its own name. It can have legal obligations in its own name. Nobody has to act on its behalf. It's a company which is entering into. Of course, it's an artificial person. Therefore, somebody signs as an agent or as an employee, whatever. But the company is entering into it. Right? It can be sued and be sued. It can sue and be sued in its own name. These are the qualities of a body corporate, right? And of course, perpetual succession. Perpetual succession comes automatically because it's an artificial person. It cannot be killed. Rather, it can be killed because you already studied winding up. So you are experts now how it can be killed by a process of law. A process of law brought it into existence. A process of law only can bring it to an end. That process is defined in each law, which brings it into existence will also say how it will be destroyed. But it is by a process of law, right? So that is called perpetual. In other words, even if all the owners die, the body corporate will continue to exist. That is perpetual succession. It has to have its own death. This could become relevant later when we talk about winding up of a foreign company in India. Right. Now, the point is, within this universal set of bodies corporate, you have companies incorporated in India, which is a huge number companies incorporated in India. And you have another set of possibly even more huge set, which is companies incorporated outside India. So you have companies incorporated in India, which is company. Then you have companies incorporated outside India, which is also part of body corporate. 211 says body corporate includes companies incorporated outside India. Now, all companies incorporated outside India are not foreign companies. Out of this subset of companies incorporated outside India, you have a subset, or shall we say subset, because companies incorporated outside India is a set. Within the universe of bodies corporate, you have a set called companies incorporated outside India. Within that set, you have a subset called foreign companies. Within that set, you have a subset. So, a foreign company is a company incorporated outside India. But all companies incorporated outside India are not foreign company. This is because they have given certain specific definition for foreign company. I know this sounds a little confusing, but then when did I ever say law is easy? I always keep saying law is interesting, but I never say law is, especially the Companies Act 2013, which is, I don't have to tell you how these fellows who said they are going to create a new law have made it a mess. Anyway, within that mess, it is our duty as students of interpretation of statute to make sense and meaning out of the enactment rather than reduce it to a futility. Right. Having said that, let us now see what is the definition of a foreign company. Foreign company is defined in 2 subsection 42. Remembering section numbers is your option. Please, if you want to remember. If you don't want to remember, no problem. You're not going to be penalized for not remembering section numbers. Nobody is going to punish you. But for an answer, I always use this as a numerical example. Suppose you have written a beautiful answer, conceptually correct, and it is right. Okay, Sahi answer. No problem. You will get, chances are you will get on 5 marks, you will get 3. Agreed. 3 sure. Because you are right. Nobody is going to give you 4.5 and also this is not state board exam. This is CA Institute. Okay, our correction is tough. But having said that, if you are right answer, then 3. Now, if your handwriting is neat and if you are given section numbers, case laws, etc., shift it to 4. That 1 mark difference you will get if you write definitions. I'm sorry, if you write section numbers correctly. Right. I mean, I leave it to you. It's your choice. Okay. If you're otherwise the answer is correct, definitely get 3 marks. 60% of the marks you will get. Going beyond that 60% if you want, it's up to you to, if you want, you can remember. Okay, this is my view. So don't keep on asking, so do I remember so your numbers are? If you want to remember, if you can remember, nothing like it. But if you're not able to remember, don't flagellate yourself and punish yourself and waste your time trying to mug up. Rather, be more thorough in remembering the concept and how to write that concept. Okay, in proper English. If possible, verbatim, try to do it. That is actually better because that will definitely, your journey to 60% is already there. Beyond 60, right? If you remember the section number, write it there. If you remember some case law, rare, nowadays, there are not that many case laws also are being quoted nowadays. Because in final level, there is no big case law. But if you want, you can quote. Okay, don't go wasting your time on that is what I would humbly suggest. Okay. So, foreign company means any company or body corporate incorporated outside India. So, a foreign company is also a company or body corporate incorporated outside India. Okay, right. Now, they use the words company and body corporate here. Please, that is the first stupidity because this guy defines company in another way elsewhere. Here he says any company. What he should have told is foreign company means any body corporate incorporated outside India. But then, let's ignore it. What they are trying to say is, other than a company incorporated in India, any other company which is incorporated outside India as a company, or even any body corporate, means not necessary that it should be a company outside India. It could even be an LLP, whatever. So the word body corporate is wide enough to include LLP also. Any company, maybe that is why they are trying to make the distinction between a company and a body. But then, my dear friends, a company is a body corporate. Yeah. Why again a company or body corporate? This is where they make a mess. Anyway, Foreign company means any company or body corporate. The point is it is incorporated outside India. So the origin of this entity is not in India. Then it also, which has a place of business in India, whether by itself or through an agent, physically or through electronic mode. So what is being contemplated here is a presence. The presence could be not necessarily directly, but through an agent, a person acting on behalf. An employee would make it, if there's an employee sitting here signing on behalf of the company agent. Physically, that is good. They have their own office here. They have set up a place of business in India. Fantastic. Or through electronic mode. So now they've sort of said not only physical presence, or shall we say deemed presence through an agent, physical presence, also virtual presence, virtually through electronic mode. Now, this is a very dicey area because we really don't know what is virtual presence. For example, there are many gaming platforms which are encouraging people to play rummy and all that. Now, where are they? Where are they incorporated? Where do they operate? Do they have a place of business in India? It's a bigger question. Similarly, you have the so-called Bitcoiners, rather the crypto guys, the cryptocurrencies, crypto maniacs. So these guys are all sort of operating from where? What are they? Who are they? See, I will explain to you in detail as we go further. But the point is, this electronic mode needs to be carefully understood. We will see that. Don't worry. We'll be giving it. So this company or body corporate incorporated outside India has a place of business in India as through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner. Okay. Right? Now, my dear friends, why that and there? Could be R, because these are obviously mutually exclusive. Am I correct? They are mutually exclusive. They are trying to cover an omnibus. That is, they are trying to make this a little more exhaustive. And they are saying, look here, even if it is you don't have a place of business in India, even if you are not operating through an agent, even if you are not physically here, even if you are not virtually here, if you conduct any business activity in India in any other manner, you are a foreign company. Agreed? Then why and? See, this is where, you sometimes and will become or. This is one example where and will become or. Okay, views expressed herein are the views of the faculty. And of course, 33-decade experienced member of the Institute of Chartered Accountants of India and the Institute of Company Studies of India. I have written a book on company law. So I'm only giving my opinion. So don't think that is the final. You may have definitely your own view. But as a student, before you form concrete views on subjects and say, I am right, wrong and all, do a little more research before you come. There is the point. That's all. Nothing else. Sometimes, students ask queries and all to me offline. Very good queries. Some of them are very thought-provoking. But then sometimes they don't see the whole picture. They see one aspect of it and then start getting into one line of argument. Nothing wrong. See, our ancient Indian culture, tarka is a very, very important method of knowledge acquisition. Tarka. Tarka means argument, debate, not argument, debate, where you have one view, I have one view. In a very polite and, shall we say, gentlemanly manner, we exchange our views. Either I learn or you learn, or neither of us learn, but we agree to disagree and go away. It's called tarka. Tarka is a very powerful method of knowledge acquisition, peculiar to Greece. Actually, it's not peculiar to India. And I think they grew simultaneously. In India, we called it tarka. It was also there in ancient Greece, almost contemporaneously. Okay, if you are going to be very, patriotic about it, you can always say it originated in India, but I have my own doubts. I think it's common all over that part of the world. People were willing at that time in ancient India, people were willing to argue or debate and then come to a conclusion. Nothing wrong in that. So long as you don't get personal about it, etc. So long as you are willing to listen to the other person. Problem is, nobody is willing to. Many times, people say, Mr. Srikanth, listen to me. So I have listened. Then when I start giving my view, they'll again interrupt and talk. They say, come on, I have listened to you fully. I have understood what you said. At least let me confirm whether I have understood. Even that point, that opportunity you are not giving me. So it is like, accept my view or else get out. Okay. Now that way, if we live our life, what will happen? We will not acquire knowledge and grow. That is all. Nothing else. You will become very wealthy. You will become a senior managing director, the general manager and all. But as a human being, growing becomes very, very difficult. Anyway, so definition of foreign company, it has a place of business in India, whether by itself or through an agent, physically or through electronic mode, and conducts any business activity in India in any other manner, right? Now, place of business includes a share transfer or registration office. Share transfer or share registration office. Okay. See, this is a case where a company has, shall we say, issued shares in India. It does not have a physical presence in India. It does not have a virtual presence in India, no agent, nothing. But that company has issued shares in India. Later on, we are going to see that this is possible. A company incorporated outside India can issue shares in India, right? But in order to facilitate that issue of share, if they are setting up a share transfer or registration office in India, automatically they become a foreign company. They are incorporated outside India, now foreign company also. Right. So what is this electronic mode? Electronic mode means carrying out electronically based, whether main server is installed in India or not. Okay, so they are saying even, for example, today, most cases when you are on the cloud, definitely you are not in India, sir. You are outside. Okay, because you are either using Amazon or some other service provider. So your main server is installed outside India. If you are using cloud, if you are in India, then your server is here. There is no problem at all. Even if you are a foreign company, your server is here. So here they are saying whether main server is installed in India or not. Right? So you are carrying out electronically based business. Okay, but not limited to business and business to consumer transactions, data interchange, and other digital supply transactions, offering to accept deposits or inviting deposits or accepting deposits or subscriptions in securities in India or from citizens of India, financial settlements, web-based marketing, advisory and transactional services, database services and products, supply chain management, online services such as telemarketing, telecommuting, I don't know what that is, telemedicine, telecommuting, seriously, I don't know what that is. Commuting is going from one place to another. Okay, telecommuting, telemedicine, education and information research, and all related data communication services. Friends, what they are trying to say is, this 1 to 5 are examples of how you can carry on electronically, business electronically, but this is not the whole. That is why they are using the word but not limited to. So electronic mode means carrying out electronically based, whether main server is installed in India or not, including but not limited to business, BTC, B2B. They are giving some examples, but these are not restrictive. You can have one more example, one more business which is carried out electronically, etc. So this is a wide definition is all I'm saying. If you are having any customers in India, you are out. You are carrying on business electronically. I think there is a simple way of understanding it. If you got a customer in India or a vendor in India, even if your vendor is in India, you are gone because you are conducting business electronically. Okay. So because you are buying here and selling, sort of very wide definition, right? Good. But then the idea is to catch these people so that, for example, see, your cryptomaniacs, cryptocurrency fellows are not here, but they will also be covered because so long as they are carrying on electronic business in it. You want a guy from India to become a bakra, you want him to buy your cryptocurrency, you are very much a foreign company because you are carrying on business in India in any other manner, conducting a business in India in any other manner, right? So I'm saying this is a very wide definition, which is good because the goal of this definition, my dear friends, is to bring these companies under the purview of our Indian law so that we have a right to control them and ask them, hey, what are you doing here? Yeah, what business are you doing? Why are you doing? The idea is to protect our citizens from, shall we say, first. But our citizens waiting for the opportunity to go and get into trouble. Cryptocurrency, we will subscribe. Online rummy, my entire house I will sell and play rummy and become a pauper. The fellows are just waiting for these opportunities. How to protect them? Nobody can protect them. Nobody can protect them. Why bring God into this? Nobody can protect these fellows from their own foolishness and greed. Okay, from the exam perspective, sir, please don't waste my time, sir. Only talk exam, right? So what are these? Whether the following companies can be considered as a foreign company. First, a company which has no place of business established in India, yet is doing online business through telemarketing. Yes, it is a foreign company. A company which is incorporated outside India, employs agents in India, but has no place of business in India. Agent means a guy who acts, for example, there could be an agent who procures business. There are many examples like that. See, the agent's job is only to procure business. The company has no place of business in India. So once he gets the order, this local Indian company will directly place an order with the foreign company. The bill of entry will be in the name of the local Indian company. So it will be like an import sale. But the agent will be actually procuring the business and he will be representing the company. Please understand. So the agent won't have, there will be no local billing. There will be no billing on the agent or there will be no billing on the local entity. Nothing. Straight away, the bill will come from the foreign company to the, incorporated outside India to this guy. But the agent only procuring the business. So he is acting on behalf of the company incorporated outside India. Therefore, see, this company which is incorporated outside India employs agents in India but has no place of business in India. So the institute ka view is it is not a foreign company because they are saying whether by itself or through an agent, it has no, see, they are reading these two together. Has a place of business in India, whether by itself or through an agent. So there should be a place of business in India. Therefore, since this fellow has no place of business in India, it is not a foreign company, right? I would humbly beg to differ because that's what I'm saying. This and is creating all the problem. Because of that and, unless it has a place of business in India, even if it conducts business activity in India in any other manner, it would not be covered. So that and if it is being very, very strictly interpreted, the person should have a place of business in India, right? No. So this way, it's not a company incorporated. Whereas this company, it has no place of business established in India. It is doing online business through telemarketing. It's covered or through electronic mode. So obviously, if you are doing it through electronic mode, you will not have a physical presence. So there are two concepts covered here. One is having a physical place of business in India, whether by yourself or through an agent. Having a place of business in India, whether by yourself or through an agent, physically or through electronic mode. Okay. So the point is, if you are doing through electronic mode, you need not have a place of business in India because you will not. The whole point is to operate virtually. But if you are doing online business in India, you are a foreign company. But if you're doing it through agents, but you do not have a place of business in India, you are not a foreign company. A company incorporated outside India, having shareholders who are all Indian citizens. Okay. This concept will be taken up a little later, but as of now, please understand, it is not a foreign company. Why? Because it has no place of business in India. See, simple. Yeah. A gentleman is a citizen of India, but he incorporates a company in the state of, in the state of Texas in US. He and his wife are the 100% shareholders of that American company. But that American company has no place of business in India, nothing in India. Business is carried on with American clients. No business in India. That company is billing in America, rendering service in America. Right. The only thing is it's owned by shareholders who are all Indian citizens. That doesn't make it a foreign company in India. It is a company incorporated outside India, but it is not a foreign company. Right. So you notice that this question has been asked in November 2018. Similar question has been asked in November 2019 also. Just for your information. Okay. So I don't know whether it was asked in 21 November. Check out. In the light of the provisions of the Companies Act 2013, examine whether the following companies can be considered as a foreign company. Messrs. Redstone Limited is a company registered in Singapore. The board of directors meets and executes business decisions. Mr. Gali, Sairam Gali, your question is not clear. You are asking, sir, only partnership firm other than LLP can do. What are you asking? Can you be a little more elaborate? LLP is a body corporate. Partnership firm other than LLP is not a body corporate. Is that okay? Have I answered your question? If not, you'll have to elaborate your question. I will answer. Okay. Good. So, Mrs. Redstone Limited is a company registered in Singapore. The board of directors meets and executes business decisions at their board meeting held in India, not a foreign company, because they are going strictly by the term, physical place of business in India or virtually. So here this company is not carrying on any business in electronic mode, nor are they doing any they don't have a physical presence in India. It's just that the board meeting is held in India, that's all. Doesn't make it a foreign company. Give my own, the old example, we'll take it up now. The guy who incorporated a company in the state of Texas in US, okay, may have a board meeting in India. After all, husband and wife for years, they'll have a board meeting for some purpose, for limited purposes. They might hold a board meeting, pass a resolution and send it to America to their attorney for some purpose. Doesn't make it a foreign company, right? Mrs. Blue Star Public Company Limited, registered in Thailand. Nice to know that in Thailand, they have the word limited similar. I think Thailand and India will have similar laws because both of us were under the control of British for some time till the US took over Thailand and nobody took over us. So, Mrs. Blue Star Public Company Limited, registered in Thailand, has authorized Mr. Y in India to find customers and to enter contracts with them on behalf of the company. Mr. Y is an agent in India, therefore it is a foreign company. Friends, as far as I'm concerned, the second question ka answer, according to me, it is a foreign company, but the institute answer is it is not a foreign company. Sorry, I'm not trying to justify, I'm saying the sincere, because see, look at Blue Star. Mr. Y is there, he's an agent, he's in India, and he finds customers. So they are saying it's a foreign company. So technically, company incorporated outside India, employing agents in India. I think the stress is being placed on, but has no place of business in India. So here also, either we have to say it is a foreign company, but if Blue Star Public Company has no place of, so we have to assume that they are having a place of business in India through Y. Then only it will become a foreign company. Okay. My suggestion, okay, your real doubt will be, no, sir, don't waste my time, sir. Tell me what answer I should write in the exam. My suggestion, the minute you see agent, you be very clear. In case the company has a place of business in India and operating through the agent, it is a foreign company. In case the company does not have a place of business in India, it is not a foreign company. Nothing wrong in writing two options. Many students have this confusion. They think answer means there's only single answer I have to write. No, sir. An intelligent chartered accountant will give two views. See, when I am asked by my client to give an opinion or tax planning or solution for a corporate problem, I can't give them an answer which is single. Sometimes I tell them, boss, yesterday I was in a discussion with the client. I gave them two options. I said, look here, do like this. These are the consequences. Do like that. Both are viable. Both will take you to your destination. But there are two ways of doing it, as I can see it. So take it. I can possibly say which is, I can give you some ideas on which to. I can also suggest go for A or B. But how can you decide? Is the point. There is no absolute way of deciding what to do. See, sorry to digress and go to a totally different topic. Your Income Tax Act today gives you old regime tax and new regime tax. For up to at least 21, 22, you can adopt the new regime or the old regime. Now, means the higher tax rate or the lower tax rate. If you want the lower tax rate, you should not claim any deductions under Chapter 80, blah, 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 blah. Chapter 6A, blah, blah, blah. So the point here is that I can't decide for the client. Yeah, I can't give an answer and say, hey, this is your tax rate. I can only tell him, Baba, these are the two options. This is the computation. Choose. Now you choose what you want to do. So don't be worried about, such ambiguities in the world. Going forward, you are going to live in a more and more ambiguous world. So if you are expecting only black and white solutions for all problems, you will be disappointed. That's all. But if it's like me, you are willing, or like many people in this world who are successful, you are willing to operate in a gray area where nothing is black and white, but we know where we are going and we can work within that we are willing to take an allowable degree of uncertainty in our life, and we are able to measure that uncertainty and work with that uncertainty. Success is there. This is my humble view. So students, till +2 you could be like that. Yeah, I want answers, sir. What is the answer, sir? But once you become a professional, you should be willing to think through at all options and then give out a well thought out written answer, right? This is the real secret of success in CA exam. Not mugging up, not memorizing everything, vomiting. No, that is not the way you win CA. You win CA by knowing the subject logically and writing the exam intelligently, get marks. Messrs. XCX Limited Liability Company, LLC, registered in Dubai, has installed its main server in Dubai for maintaining office automation software by cloud computing for its client in India. Chalo yaar, electronic mode. Straight away, it is a foreign company. See, the link here is for its client in India. Here, doing online business through telemarketing in India. So the minute you see these words, automatically he is a foreign company. What happens if he is a foreign company? This is a real question you have to ask. This is, right, sir. What happens if he is a foreign company? Check it out. Foreign company only you can make him obey your law. A pure company incorporated outside India, which has not got any place of business in India, what law you can pass on him? Yeah? Fellow sitting in Atlanta, you can't pass a law for him because he is bound by the US law, that too his state, not even the federal law. He is bound by the laws of his state. Only when it's a cross border or other matters, the federal law will apply. Otherwise, even income tax is paid in his state based on his state law. So how you can pass a law for that fellow? But the minute the fellow comes and puts his little finger in our country, place of business, either through agent or physically or by electronic mode or any other business manner he is doing business, then he becomes a foreign company. Then the sections we are going to see now from now on, sections 380 to 386, which we are now going to discuss, very purely procedural sections, are applicable to him. Also, sections 392 and 393 are applicable to all foreign companies. That is why the word foreign company is to be understood. So if you understand foreign company as incorporated, all companies incorporated outside India are foreign companies, you will be wrong. There may be a company which does not satisfy this definition. If a company incorporated outside India does not satisfy. We saw examples. Now, you can't make 380 to 386 applicable to that fellow, right? They are also defining one more category within this broader framework. So the minute he is having a place of business in India, irrespective of shareholding, whether foreigners are holding or Indians are holding, 380 to 386 will apply. 392 and 393 will apply, right? But if one or more citizens of India or one or more companies or bodies incorporated in India, please note, companies, here they again use the word company, different body corporate. What they are trying to do is distinguish with company incorporated under the Companies Act 2013 and an LLP or any other body corporate. Okay, whatever it is, if it is incorporated in India, okay, so one or more citizens of India or one or more companies or bodies corporate incorporated in India or one or more citizens of India and one or more companies or bodies corporate incorporated in India, whether singly or in the aggregate. So either Indian citizens or bodies corporate or companies incorporated in India or combination, one citizen and one body corporate, two citizens and one body corporate, two bodies corporate, two citizens, whatever, whether singly or in the aggregate, if this group is holding not less than 50% of the paid up share capital. Not less than means even 50 is included. Even if they hold exactly 50 also covered. It should not be less than. If it is exactly 50, also it is covered. So not less than 50% of the paid up share capital, whether equity or preference or partly equity and partly preference. So of a foreign company. So you take the total paid up share capital, means add your equity and preference. Then see what is the shareholding by these entities. If together that exceeds 50% of the paid up share capital, whether equity or preference, then this condition is satisfied. then those companies come under a special radar. Such companies shall comply with the provisions of this chapter, definitely. And such other provisions of this act as may be prescribed with regard to the business carried on by it in India, as if it were a company incorporated in India. Right? So they have prescribed certain sections which are applicable to all foreign companies. We'll see that. See, this is different. A company which has more than 50 or more shareholding from India, it will be treated as if it were a company incorporated in India. And other provisions of this act will also apply. But a company incorporated outside India which does not satisfy this criteria, okay, but it has a place of business in India, then it becomes a foreign company. So 380 to 386 will apply, only 392. Other provisions of the Companies Act will not apply to this company. Right? This is my understanding. Now, why all this elaborate stuff, you might want to know, and rightly so, because I always believe that a student of law should always inquire as to the reason for enacting. Of course, in many cases, it may be very silly. We may not even understand why it is there, but by and large, a student of law, instead of only looking at what is the content of the section and arguing about it, should ask, why is this section like this? What is the purpose of the law? What is it that the law is trying to achieve through this section? Once you are clear of that, then you will be able to understand the provision clearly and logically. So in this context, the purpose of chapter 22 is to monitor and control companies incorporated outside India with regard to their activities in India. So my goal is to catch them. What are you doing with my citizens? Who are you? So we are making him a special category called foreign company. They are monitored closely through compulsory registration, filing of documents and reports, etc., as to their Indian operations. So our goal here is to identify these fellows. Boss, you are a company incorporated outside India now, but why are you coming in India? You are setting up a place of business in India. Agreed? You are having an agent in India who is having a place of business in India. You are carrying on electronic mode, then 100% you are a foreign company, and therefore 380 to 386 will apply, which means compulsory registration, filing of documents. We should know who you are. What is your antecedent? So tomorrow if you do some nonsense, I will catch you. And I know where to catch you. Once you understand this, then the following purely procedural provisions will be easy to remember. See, what I'm going to give from now on may be a little boring also because it's all purely procedural. For example, we'll begin by talking about that documents to be filed by a company, foreign company, for compulsory registration. Okay. So the first topic we are going to see is documents to be delivered by foreign companies. Please note, these sections are applicable to companies incorporated outside India, which are satisfying the definition of foreign company only. Only then this rule will apply. Okay, before we go there, one practical point I'm going to say. Somebody comes to me and says, sir, we are a Singapore-based company. I get a lot of consultations like this because India is such an attractive place. It's a huge lucrative opportunity area for all chartered accountants. Provided you have the ability to handle foreign clients, so they come to India, they come through somebody whom you know, so they are routed to us and are referred to by another client from that same geography. But the point is when, for example, they come to me and say, sir, we are a Singapore-based company or a Malaysia-based company. Okay, what do you want? And so we want to do business in India. Okay, so how do you want to do it? So we want to set up a place of business in India. Generally, when they come to that point, I quietly allow them to talk fully. And then I suggest to them, sir, please do not do that. Why? What are you saying? We want to come and operate in India. Agreed, you operate in India, but do it through an Indian subsidiary. This is a very practical session I give to all my clients and they follow it. So what we do, we form an Indian subsidiary under FEMA. I'm sure we are going to, you study FEMA later. Under the Foreign Exchange Management Act, or maybe you already studied it. You will study it later. Under the Foreign Exchange Management Act, most industries are open. Software, consulting, you name it, yeah, it's all open. 100% foreigners can set up companies in India and make foreign direct investment. So I say form a company in India, bring FDI, it's easy, procedure is very simple, declare it to Indian government. Then this Indian company will be bound by Indian law, no problem. That is better than you coming and delivering all these documents here, wasting your time. This is my general advice. And till date, they have not disagreed with me. Initially, they will meet me. They will go back to their advocate or some other person in India. Then they will see all this stuff that they have to give. Then they will come back to me and say, Mr. Srikanth, we will incorporate a company in India. It's an Indian company, subsidiary of a foreign company. No problem. Okay. That will not become a foreign company. Okay. It's an Indian company. Merely because 100% shareholding here, it don't become foreign company. Maybe if you are having that confusion, please let me remove it. Subsidiary of a foreign company in India is not a foreign company. And company incorporated in India is an Indian company. Okay, it is company. That's all. It may have 100% shareholding from foreigners. It is bound only with Indian law. Only FEMA will be applicable. Terms of will be applicable. Good, yeah, good. Anyway, you're going to do this. All this is going to happen to you. You're going to be taxed in India. You don't escape that tax. At least this way I can do proper planning for you. Even within the tax plan, even within the transfer pricing framework, we can work. We can skate there. Whereas if you're directly coming here and purchasing or selling, 100% you will be under a radar. They'll be watching you and asking, what are you doing? What are you doing? Okay, so this is my general advice to clients. And which is why mostly I do not encourage a foreign company to operate directly in India. When they come to me for consultation, this is a very, very professional and personal view expressed by a member of the institute in practice, as I told you, for more than 3 decades. This is my view. Of course, somebody else may have another view. Okay, so the Singapore-based company is coming and Mr. Chan or Mr. Kim is telling me, Kim would be a Korean, but whatever he's telling me, Srikanth, I don't want this. I want to operate in India. Okay, we'll operate. So Section 380, you have to file all these documents with the Ministry of Corporate Affairs. What are these documents? A certified copy of the charter, means memorandum. Charter is the document which brings the company into existence. It could be a charter given by a government or by a ruling monarch, or a statute, means a law. See, many of the companies, like say, for example, your Life Insurance Corporation was formed by a statute. State Bank of India formed by a statute. IDBI formed by a statute. These are all statutory corporations. Subsequently, they incorporated as a company under the Companies Act in order to get themselves listed. Right? Now LIC is also possibly going to do that. That is why it's called Life Insurance Corporation. Even Indian Oil Corporation Limited, or for that matter, the BSNL, Bharat Sanchar Nigam, was Bharat Sanchar Nigam. Later on, it became Bharat Sanchar Nigam Limited. Right? BSNL. Believe me, that corporatization was really tough. In fact, BSNL, couple of times I have given lectures to them on what it means to be a company and how to, understand corporatization and stuff like that. Orientations were conducted for them. So earlier they were only under the statute. Okay, they were statutory bodies. So charter, statutes. Today I don't see many statutes. The last possible statutory body which is going to go is our friend, possibly followed by these fellows. The general insurance companies may merge and then come. I don't know actually. I don't know about that. Anyway, so the Life Insurance Corporation, because United India Insurance Company, I think it's a limited now. It's now incorporated as a company under the Companies Act. Right? Life Insurance Corporation is now the fellow who is going to come in. I'm sure you're aware of that. The next big IPO in India is going to be the Life Insurance Corporation public offer of shares. Anyway, so a certified copy of the charter, statutes, or memorandum and articles of the company, or other instrument constituting or defining the constitution of the company. Some kagaz, some paper. What is your... Now, if the instrument is not in the English language, a certified translation thereof in the English language. More about certified translations a little later. Right now, certified is a very important word. It is defined in this section. Right. So, it is not in the... Obviously, see, not everybody in the world has, English as their language. For example, in Japan, All documents are in Japanese, not English. You go to Sweden, Swedish, Germany, German. Okay, only Anglophone countries like India, Sri Lanka, where British domination was there, we still use English as an alternate language. Okay, good or bad, I don't want to get into that, but the point is we still. Whereas there are many countries where English is not in any way a dominant language or spoken language. So we have, for example, classic example is Japanese. So many, see, whenever a Japanese company comes to India, everything will be in Japanese in that. The fellows cannot understand English. They cannot speak English. They cannot read English, or maybe some of them can. Okay, the higher level of hierarchy can. And they are the big bosses because they can speak English. Because most of the lower cadres cannot speak English. And when they come to India, they need a translator for everything. We have to address the translator also very slowly, because the translator also cannot speak English fluently, but that fellow is blind, this fellow has one eye. That's all. That is the only difference between the two. So you can't speak your Shakespearean or Oxford English to that fellow. You have to speak Pidgin English, where the fellow will understand only at that level, and you will then translate it. And that's how it is. I'm not trying to put the Japanese down. It's been their policy to only have their language and not to read English. That's good for them. They're great. Okay. So the full address of the registered or principal office of the company. Fantastic. A list of the directors and secretary of the company containing such particulars. The D is very, very important. The name and address or names and addresses of one or more persons resident in India, authorized to accept on behalf of the company service of process and any notices or other documents required to be served on the company. See, any summons served by a court or a quasi-judicial body is called a process. So others it's called notice. So the Ministry of Corporate Affairs sends you a notice. For example, income tax hearing, you get a notice. That's a statutory notice. Now, the government of India wants to know, look here, you are a foreign company. Okay, you will have an address in your country, no problem. But if you have entered into business in India, you might become liable under my statute, under any law. Possibly GST you are owing, or income tax you are owing. Then I need to send a notice to you. How do I do it? So please give me an Indian name, a person resident in India or persons resident in India who are authorized to accept. So I will not serve notice on your foreign address. I will only serve on him. Means that notice will be sent only to his address. If he doesn't inform you, you got a problem, that's your problem, not mine. Okay. The full address, see, in addition to this guy, you can have your own address also, but your own address is not enough. Please understand, the foreign company may have a full, proper physical address in India. Good, I'm very happy for you, but I still need to have a person who is authorized. Usually, this person would be the attorney, the advocate who advises this company. The legal advisor would be the person, or any other person. Ideally, it should be the legal advisor, because he will also know how to act on that notice. Once he gets that notice as your agent, he can act on it also, is the point. Particulars of opening and closing of a place of business in India on earlier occasion or occasions. So are you a frequent player, regularly coming, starting business in India, doing some nonsense, running away? We want to know that. See, the idea is to protect the Indian citizens. Declaration that none of the directors of the company or the authorized representative in India has ever been convicted or debarred from formation of companies and management in India or abroad. Okay. Any other information as may be prescribed. These are the details prescribed in the rule. They want the name for every director and secretary. You have to file the personal name and surname, former name, father's name, mother's name, spouse's name, okay, date of birth, residential address, nationality, okay. If the present nationality is not the nationality of origin, is nationality of origin. I got a case like this, but then I made them incorporate a company in India, so that's not a problem. But see, the guy was originally a citizen of Britain. He was born in Britain. Then this guy moves to Canada, right? And he becomes a citizen of Canada. Then He is a citizen of Canada, but he is currently residing in Singapore. And he's got a company which is in India. So really transnational. So his present nationality is Canada, but his nationality of origin is Britain. So Great Britain, where he was born. From UK, he migrated to Canada, set up. Very happy there. An engineer. Now he came. Then he found that, it's better for his, because he was doing a lot of business in the, the eastern side, Far East, Malaysia, Thailand, Indonesia, India, of course, Sri Lanka. So he felt it's better for him to be nearer. So he sort of set up a residence in Singapore for information. So you have to mention all this. Passport number, date of issue and country of issue. Holds more than one passport than all passports. I'm not aware of this. I don't know which country permits you to have more than one passport. I don't know. Indian government does not. Many people say, yes, sir, I've got dual citizen. There's no dual citizenship. In fact, one lady came to my office and said, sir, I'm having dual citizenship. I said, okay, what do you mean by dual citizenship? No, I'm a citizen of both India and the United States of America. I said, no way. Don't even let Biden or whoever it is hear you say this, because you are, asked her only one question, simple question I asked her. Which passport do you have? Show me your passport. She showed me. I said, US passport. Congratulations. Show me your Indian passport. No, my Indian passport. No, but I have a OCA card. Overseas citizen of India. I said, OCA card is just a card, yeah. You are a citizen of US. You cannot be a citizen of two countries. I mean, that's stupid. Person, if you desire to go to another country, you become a citizen of that country. You can't be a citizen of more than one country. So normally it can't happen, but if they want to be careful that somebody may have two passports, then it should be given. Okay. Indian government will not issue a passport when you already hold a US passport. You are a US citizen, we respect you. Maybe we will salute you and say you are a person of Indian origin, we'll fall at your feet. Maybe we will give you what is known as OCA, Overseas Citizen of India. Some card is there. Just show that card and feel proud about it. That's all. But believe me, tomorrow, any issue comes up, we will treat you as a citizen of US. Okay? And you will not have the privileges of a citizen of my country. In case those privileges are going to be given only to my country citizens, that privilege will not be given to you because you are a citizen of US. Okay? Of course, when you put it so bluntly, many of our brothers and sisters who decided to go to America get angry, but then it's a fact of life, right? Income tax permanent account number, if applicable, yes, this for this director, if necessary. If the director is not having any income in India, there is no need. But if it is there, then give. That's what they're saying. Occupation, if any. Wow, that if any, I like it. Whether directorship in any other Indian company, if so, you have to give the DIN and SIN of that company. Other directorship or directorships held by him, even in foreign companies. In case of secretary, membership number of his professional body. Whichever institute he is a member, you have to give that membership number and an email ID for communication. So, see, my suggestion, don't try to mug up all this. 100% you are not going to get a question like this. What are the documents to be delivered by a foreign company? No way. Just try to remember it. That's all. Don't muck it up. Okay. When should these documents be delivered? When? These documents should be delivered within 30 days of the establishment of its place of business in India. Right? Within 30 days of the establishment of its place of business, which means it could include appointment of agent or setting up the electronic business. Okay? When you post your website online and allow access to Indians, that minute you are within 30 days, you have to give me the details. Logically, right? So you open up the portal and then you start sending messages on Instagram and Facebook and all, asking people to visit your website from India. Then from that moment, within 30 days, you have to do it. Because you started electronic. In electronic mode, you got started business operations in India, right? So we have to be very, very careful. Today, Indian government is being very protective and I'm very happy about that because merely because of, so many gaming platforms are there, games of skill, games of chance. So many nonsense is happening. And maybe I'm using the word gaming platform wrongly, but there are so many. Today, these foreign websites which are offering rummy, they are destroying families. I know a lot of people who are blindly playing rummy, selling property and playing these games. And they are not incorporated in India. But they will technically be foreign companies, and they have to file all these documents within 30 days. They would have done it. I'm sure they would have done it, but then some sort of a strong action has to be taken against these rummy guys and crypto guys. Unless that is done, believe me, ripe scam waiting for happening, not a scam, some disaster waiting to happen for citizens of India who are foolish and greedy. 100% they're going to be affected. And then no point in saying government didn't do anything, Anyway, so these documents have to be filed within 30 days of the establishment of its place of business in India, where, please note it has to be done to the registrar having jurisdiction over New Delhi. But today with the MCA portal, it doesn't really matter, except that, of course, you will only upload it. The jurisdiction will be New Delhi ROC. So for a foreign company, which could be incorporated, which could be setting up a place of business anywhere in India, the jurisdiction is New Delhi because obviously, I'm sure by now you would have understood the logic. They want a centralized control on these fellows. See, so they don't want it to be distributed and to hide. They want all these fellows sitting in front of the registrar having jurisdiction over New Delhi so that he will monitor these guys. And taking action against them is also easy because their embassy will be sitting next door in Janakyapuri. All this fellow has to do is the MC has to serve a notice on their embassy because they're a foreign company now. So embassy also has to be informed about what nonsense they're doing. So to that extent, right? Now, how do I do it? In Form FC1. So along with these documents, you have to file Form FC1. So the Form FC1 will have all this stuff. Any documents to be enclosed, you should scan it and also enclose it. And the fee should be paid and upload it. In case under the Foreign Exchange Management Act and the RBI regulations, a company setting up a place of business in India, whether it could be a branch office or a project office or a marketing office or a liaison office, they should get themselves registered with RBI also. They should be approved by RBI also. In your syllabus, it is not there. I have not seen it in the FEMA syllabus. But for your information, if you are a foreign company setting up a place of business in India, in addition to filing with MCA, first you have to get the approval of RBI. You have to go to the RBI. There is a form for that. You have to apply. They will give. And then only you can come here and go. So along with your application, you have to enclose the FEMA approval also. Now are you clear why I do not encourage foreign companies to come directly to India? I do not encourage them because of all this nonsense. RBI approval, then MCA, then so much thing unnecessarily. And anyway, you're going to maintain separate set of books for India. Anyway, you're going to file Indian accounts. It's going to happen. Anyway, you're going to do it. So if you're anyway going to do it, it's so easy for us to do it if it's a subsidiary. And then I'll give you the accounts, you take it. Same logic for our companies also. When you want to go abroad, form a subsidiary in that country, invest into it, overseas direct investment, operate that company as a separate entity, declare yourself dividend, whatever, subject to the taxation laws, whatever double taxation avoidance is there, so on and so forth. I mean, this is a more elegant way of operating in my humble view, but I'm sure you will also have your own view. Maybe you're right. Maybe I'm wrong. I'm always ready to accept that I'm wrong. That way I learn more. Foreign companies should deliver a return containing the particulars of alteration. So suppose any of these particulars are changing, okay, then you have to file the details of the alteration. When? Within 30 days of alteration. How? In Form FC2 along with the prescribed fees. Right? Simple. These are all purely procedural. In fact, I don't see as such. I mean, maybe I don't know if you have MCQs in final. I seriously don't know. I hope not. But if it is there, then these are all classic multiple choice questions here. Okay. Foreign company where there is an alteration of the particulars filed by a foreign company, the alteration should be filed within dash days in dash Then they will give 60 days in form FC3, 75, 45 days. Like that, they'll give you choices and you can answer it. Okay. I mean, that type of a question is nice for MCQ. Beautiful. Because in MCQ, what you're trying to test, do you know or you do not know? That's all. Do you know the form is FC2 or not? Straight away. So, for such questions, MCQ is ideal. But logical, thinking-oriented questions and all, if you try to use MCQ, it will be a pathetic failure. Okay. If a company, if any foreign company ceases to have a place of business in India, it shall forthwith give notice of the fact to the registrar. So you have to inform the registrar when you cease to have a business. And from that day onwards, the obligation of the company to deliver any document to the registrar shall cease, provided it has no other place of business in India, right? Okay. So if you're closing one place of business, still continuing the other one. So you're closing your Surat operation, but continuing in Mumbai, then also you are obligated. But if you're closing both Surat and Mumbai office and getting out of India because you're discussed with the dirty bloody Indians, then no need for you to file any more particulars. Okay, you're free, sir. Bye. You cease to become a foreign company, ma. But you are a company incorporated outside India. But you are not a foreign company because you don't have a place of business in India, right? So that is the criteria for foreign company. In case a foreign company has not filed particulars under earlier law, friends, going forward, even this fellow has to file only under the new law. But suppose a foreign company set up a place of business in India and has not filed particulars under the earlier law, that fellow alone shall continue to be under an obligation to file under the old law. Right? Even that guy, if there is an alteration, if you are a foreign company, you have already filed under the old law. Good. Now you are going to have an alteration. You have to comply with the new law only, not the old law. You are a company, possibly in the cusp period, when the law was enacted in 2013, there would have been some cases where they filed the particulars in the old form. By then, the new law has been notified. They are saying in those cases alone, the old law itself, whatever you filed in the old law, we will take it. Or if you want to file in that old law and close it, then come here, alteration, everything, you will come only through this method. Right? See, 381 talks about accounts of foreign companies. Accounts. Now, a foreign company has to maintain accounts for its Indian operations separately. Financial statements prepared in accordance with Schedule 3 or as near thereto as possible for each financial year. Okay. Documents that are required to be annexed in accordance with Chapter 9, which you studied in intermediate, accounts of companies, board's report, etc. in that format have to be kept. Copies of latest consolidated financial statements of the parent foreign company as submitted by it to the prescribed authority in that country under the applicable laws there. So we are talking about two things here. One, for the Indian operations, you have to prepare financial statements, Schedule 3 format, compliance with Indian accounting standards, everything, right? In addition to that, your foreign company would be there now. That foreign company ka consolidated balance sheet abroad, including this operation in the country of its incorporation. That also should be given. Suppose it is in a foreign language, a translation should be given, right? So on and so forth. A list of all the places established by the foreign company in India as on the date of balance sheet in form FC3. In addition to that, you are also supposed to give related party statement of repatriation of profits. How much money did you take out as dividend? Statement of the transfer of funds. Exactly when did you transfer the funds to your foreign counterpart? See, after all, this fellow is only a branch. Technically, the local guy, the operation in India is a branch, technically, or a license office or a project office, technically. So, if any fund transfer is happening between you, when did you do it? What did you do it? Statement. So much information you have to give. If you are a foreign company, which is set up a place of business in India, and anyway you have to hire an Indian auditor, Anyway, he has to conduct an audit of your Indian operations. So if you're going to go through all this hassle, that's why I make them understand. I show them this, not this PowerPoint. It's too boring for them. I give them a briefer summary. Then I tell them you have to file all these things. The minute they hear this lecture, in my cabin, I have the big screen in my office, in my cabin, where I show them and I give them a brief lecture. And at the end of that lecture, Mr. Srikanth, we'll form a company in India. We will bring money through FDA route. That is good, boy. Go. This is not a good idea, is what I would say. But if, as I told, these Singapore Chinese and these Chinese fellows, they'll never trust you. Koreans, they will never trust you. They'll go consult another advocate. And then finally, they'll inquire the fees from those fellows. Then they'll come back here and say, Sir, Srikanth-san, please go. Japanese are that way good. What I found with the Japanese is that, they got a straight logical brain. Once you make them understand something, they will go. And once your route map is given, you can't change. If you want to change it, you have to go by. Again, you have to take a change and go. They are willing to change. But for that, again, they will say, think, analyze, go. Which means my experience with Japanese has been they are very slow. I'm sorry to say this. But they spend a lot of time planning. They spend a lot of time thinking it through. But once they decide, chuck, they finish it. Thereafter, they don't do blah, blah, blah. So once they decide to do something, agreed, clear, mail is given, then they give you whatever you want and you proceed, finish it. So that way they are faster in execution, but they spend a lot of time in planning. Sometimes for Indians, it becomes a little irritating because in India, we do and then we think. Whereas in Japan, they think and then they do. Which makes it a little too slow. And I also feel sometimes they think too much and waste everybody's time going into details that possibly nobody can give them any assurance. But they will want, how sure can I be? Assure me that there will be no tax in India. Like, who can assure you? Yeah, this is what the law is today. This is the taxation. I can give you one opinion. Keep on asking, how can I predict the future for you? No. Unpredictability is part of life. Welcome to the VUCA world, where you have to live with uncertainty and unpredictability. Make them your good friends rather than enemies. For me, uncertainty is a friend. I love uncertainty because I know things are going to change and therefore I'm prepared for it. Okay, if any of the specified documents are not in the English language, a certified translation thereof in the English language shall be annexed. What is a single sentence for you in this slide is a huge headache, pain, I tell you. You have to locate a translator, certificate. You have to locate a translator who is certified. It's very costly. The translators earn well. In case you feel that you want a side income and you want to earn in addition, dusra income ka, if you want a source, learn one foreign language and become a translator. Maybe French or German. Easily, you just go to Alliance Francaise and learn French and become a translator. Okay? Per page they pay you. You will continue. If you are registered and on the panel, now you will get assignments. Simply in the night you work for about 3 hours. Yeah. Quickly translate and then give it. That's all. You will have a certified, but that's why you are getting that. So all these documents shall be delivered to the registrar within a period of 6 months of the close of the financial year of the foreign company to which the documents relate. Foreign company shall get its accounts pertaining to Indian operations audited by an Indian CEA. Means you and I. Once you become a member, you. And of course, today me, or a CA firm, my firm, actually not me, my firm, Karpagam Krishnan and Natarajan, KKN, my firm, or if I'm formed an LLP. Like, whatever it is, you have to get it. See, so what are you trying to do here? Yeah? You have to prepare separate set of books for the Indian operations. You have to provide the foreign balance sheet also. You have to get this audited by an Indian guy, pay him the fees. What are you trying to do here? So much bother. But still, if you want to do it, you are welcome. Nothing wrong. You can advise the client accordingly and enjoy. And believe me, you might think that we'll get more fees this way. Actually, no. Because this complication is so much, they get so irritated. Whereas you form a company in India, let him bring 100%, make it an Indian subsidiary. So many benefits are there. See, think about it. This fellow cannot buy land. Yeah. FEMA prohibition is there. Now, foreign, this is a person incorporated outside India, boss. He can't buy any asset in India without RBI approval. Whereas a company incorporated in India, though a subsidiary of a foreign company, can buy land. What even they can engage in real estate operation. Of course, subject to limits, they can do it. But see, once they are in real estate, this will cannot bring in money. That's all, right? But a foreign company cannot do all these things. Okay, so you have to be very careful. Which is why, again, to make this point, while you are being tested for the examination separately for separate subjects, for a practicing chartered accountant or a busy CFO or a financial manager in corporate, there is no compartmentalized syllabus. When I am thinking foreign company, I have to think FEMA, I have to think MCA, I have to think taxation, I have to think GST, I have to think everything, TP, I have to think everything. I can't simply think one and say that's all. I have to think everything and look at satisfying all these statutes, not just one. But then luckily for you in the exam, I don't think they have a multi-subject case study. Whereas in the Company Secretary Institute, no, they have a multidisciplinary case study where they ask you to apply 2 or 3 other subjects and solve the 2 or 3 subjects combined and solve the problem. Okay, so which is why, the minute you are dealing with one subject, remember, there are linked with other subjects also. You can't directly compartmentalize and say, sir, I'm an expert in income tax, therefore I will give only tax advice. I mean, you can do that if you are at the higher level, which means a person like me will come to you, take your expert advice only for that, and then I will have to again incorporate it into the broader solution I'm giving it to my client, because I am in the business of giving solutions to my clients. You, as a future member of our institute, think like that. You are in the business of giving solutions to your boss, solutions to your company, solutions to your client, whoever it is. You are in the business of giving solutions, not in becoming an expert and talking in a language that nobody can understand. No, that is not what you are. You should become a solution provider. Only then you will serve society meaningfully. And once you serve society meaningfully, they pay you. Okay, they pay you automatically. If you are selling something they want, they will come and buy and pay you, obviously. Okay. Right. The chapter 10 on audit and auditors shall apply mutatis mutandis. Means what? Mutatis mutandis means with such changes as may be applicable. Okay, with such changes as may be applicable. Another interesting topic. These are all rules applicable to foreign companies, not to all companies incorporated outside India. Only those companies incorporated outside India which are satisfying to subsection 42 ka definition. Right. Now, every foreign company shall conspicuously exhibit the following on the outside of every building or place where it carries on business in India. On the outside of every office means it should be visible to the public. So I've given a photograph of Citibank. So they've given the name very clearly outside. And not only in the head office, every branch of Citibank has to do this. Wherever it can. See, Citibank is not carrying on its business from Mumbai. It's carrying on business everywhere. Every branch. Every branch then should have a conspicuously displayed banner. I'm just giving Citibank as an example. All companies. Next time when you're visiting a foreign company, just check out the board. They would have given the name of the company both in Indian as well as both in English as well as in local language. For example, here obviously this branch is possibly in a northern state. Therefore, they've given it in Hindi. Suppose they come to Tamil Nadu, it should be in Tamil, the local language. So what they should give? The name of the company, country of incorporation. And if the liability of the members of the company is limited, notice of that fact. So that will be separately displayed. If you go into this branch, you will find the name of the company. Again, they would have put up a plaque that said, incorporated as a limited liability company in the United States of America. And the liability with the limited, as a limited liability company in. So you should indicate to the public that this fellow is a limited liability company incorporated outside India. The idea is simple. The citizens of India should know that they are dealing with a foreigner and not with an Indian. Then also on business letters, bills, any letterheads and all, you should clearly state the name of the company, country of incorporation. So any communication to a third party should clearly state that you are not an Indian company, you are a company incorporated outside India, right? The fact that the liability of the members of the company is limited shall be stated in legible English characters in any prospectus issued elsewhere and in all business letters, bill heads, and letter paper. So this is a statutory duty of a company incorporated, of a foreign company. Now, 383 talks about service on foreign company. As I already mentioned, process means any notice or summons received from a court or government authority. So whatever it may be a court, or it may be a quasi-judicial body, or a government department, whatever, any communication received from them, a notice or a summons, is called a process. That process is to be served, means delivered. So where will you deliver it? So for the government of India, there is no question of going to the foreign company address and giving. No. That is why at the time of registration, we asked him to provide the name and address of the person or persons authorized to accept on behalf of the company service or process. So we know who it is. Then, any service of any process, notice, or other document required to be served on a foreign company on that person or at that address by post or personal delivery shall be deemed to be sufficient service on such foreign company. Friends, tomorrow in international court of law, this fellow cannot come and put that as a defense and say, no, this notice was not served on me in my Hong Kong address. No, I need not do it. So the minute you set up a place of business in India, you gave me a Mumbai address and an advocate's name. I served it on him, right? That's all. You agreed. The minute you came and set up a place of business in India, you agreed to this. You agreed to be bound by this. Now you cannot say international law. You should have served it on me there and now. Okay? So, but this is, see, don't think that this is peculiar to the Indian government. All government will insist on this. They say, if you come to my country, give me a local address, service will be done only on that local address, not at your foreign address. Okay? So such process need not be served on the foreign company at its foreign, sir. See, I can ask you a question here for say 3 marks, yeah. I can say so-and-so foreign company has got a registered office in say Maldives or Hong Kong or whatever, and the so-and-so department sent a notice which was served on the company at its place, which was given as authorized. Is this correct? Yeah, that's all, it is correct, like that. Or you can say the company is insisting that the notice should have been given at its foreign address. So the company is wrong. Advise the company is wrong. The notice given to your registered agent in India is valid service as per section 383. Right? Now, these sections have been made applicable to a foreign company. Okay? Means a company which has set up a place of business in India has to comply with these sections. In addition to 380 to 384, 386 and 392 to 393, they have to comply with these also. So section 71, which deals with the issue of debentures, to the extent that this company is issuing debentures in India, will apply mutatis mutandis with such changes. You will find this word mutatis mutandis coming regularly. Means with suitable changes, with such changes as may be required in the context. So, foreign company also should file annual return and comply with CSR requirement. So, conditions relating to CSR contained in section 135 to be complied with, but shall apply subject to such exceptions, modifications and adaptations. For example, there are certain companies called IFSC companies. So, such companies which are setting up in International Financial Services Center are exempted, so on and so forth. So, where they are specifically exempted, they are exempted. Otherwise, these sections will apply. Books of account to be kept under section 128. So, the foreign company is required to keep at its principal basis of business in India, books of account referred to in that section with respect to financial matters in relation to its business in India. Now you understand? So you have to maintain books of account in India, you have to get it audited, you have to file annual return. Hey, what are we doing here? Yeah, better you avoid it. Become an Indian company and be happy. invest through FDI. Sorry for making this argument again and again, but this has been I've given this convincing argument easily 10 to 12 times and convinced foreigners to incorporate companies in India and bring money through FDI route. Okay. And they have been happy, no regrets. They followed my advice, no regrets. They have intercompany transactions, they take dividend, pay the tax, they are happy. They comply with all the rules. We give them complete support on compliance and we ensure that nothing will go wrong for them. So we advise them and we ensure that they comply with the laws. So registration of charges. See, where this foreign company has got assets in India, not necessarily land, it could be machinery, You might create a charge on machinery, So that those charges also should be registered in India, right? All this you studied long ago when you studied for your intermediate, right? Inspection, inquiry, and investigation. I am seriously forgetting. I think I taught this subject to you. I don't know. I think I taught it. Whatever. At that time, I had linked it up. I told you maybe when I come to foreign companies, I'll again talk about it. Yes, your foreign company can also be investigated. Okay, all the provisions relating to inspection, investigation, inquiry, okay, will apply to a foreign company also. Mutatis mutandis. I'm sure when I taught 228 in that chapter, I would have sort of called your attention. Foreign companies also covered. Don't think that foreign companies are exempted. They can also be investigated. Jolly well investigated. Okay, surely they will be investigated. Okay. Every foreign company should file an annual return in form FC4. So, which is what they said now, 92 pertaining to annual return shall apply, subject to modification. So, that modification is here, the form is FC4, along with the prescribed fees to the registrar. Okay. Containing particulars as they stood on the close of the financial year. Financial year is 1/4 to 31/3. Whereas, please note, for filing accounts, they are talking about financial year of the foreign company to which the document relates. So, we do not know what that financial year is. But for the Indian operations, your annual return should be filed on the close of the financial year. Means on 31st March, you have to file annual return. Then, this is my understanding. Could be wrong. Again, it's very vague. Are they meaning the financial year of the foreign company under its law or the financial year in India, which is 31/3? I have a feeling it's financial year in India, which is 31. So the fee to be paid is to be seen from the company's registration. This is standard fees, yeah. The schedule of fees payable by a company is contained in the company's registration of officers and fees rules 2014. You have to pay accordingly. Now, I would suggest that since we have really got into this topic well, and we are there, I would like to have a small break. I'm sure you're also interested in a break, so we will break for this. I'm sure the topic is a little boring, or maybe too simple and not very. So not many questions are being asked. If you have questions, you can ask. Mr. Udit Kumar, I deserve this question from Udit ji because I only spoke about cryptocurrency. So if the government is allowing trading in cryptocurrency, what big taxing at 30%? Anyway, you have to pay tax at 30%, Baba. So now they are calling virtual digital assets. Let us see how it happens. Beautiful. Of course, see, once an Indian citizen is dealing in cryptocurrency, jolly well he'll pay tax. All the more, bigger question. Okay, according to me, as a prudent and conservative chartered accountant, the whole cryptocurrency thing is a disaster waiting to happen. Disaster waiting to happen. See, friends, today they will try to tax a few transactions and collect 30%. But the real problem is going to be all the fellows who put the money are going to lose everything. Till the jetty, they are going to come. At that time, what tax? What 30%? Nothing, no. All the profits of the cryptocurrency are in the books. Only when they book it, they'll pay this 30% tax. Then these fellows are not going to book it. Greedily, they are going to wait till finally the cryptocurrency will collapse. And as I told you, they will lose all the money, come down to jetty and sit. And that clause will not be, after all, see, that clause will not be allowed to be set up against anything. 100%, believe me, they won't allow you to set up that clause. Okay, so no problem. If you, I mean, as youngsters, you know, I'm also young. I'm 56 years old, young. Okay, you are 21 young. I'm 56 young. But the point, it's not about age. I'm very much capable of taking risk, but I will not be a fool. That's all I will say. Of investing in products that are dangerous. The government wants to collect some tax. Very good. As the Citizen of India, I'm very happy that they are collecting taxes. Good. Anyway, let's have a small break. Now the time is 8:31. Maximum 8:40 to 8:40. 8:40, we will assemble again for further knowledge on foreign companies. Don't go away. I mean, rather go away for a cup of tea, but come back. Okay? See you again. Welcome back from your, I hope, well-deserved break, right? Moving on with the subject. As you can see, most of these, this is not, like, for example, when we did directors, I think we did there, I taught you directors. So that was all nice topics, where there are a lot of complications and sections and all that, and where you can interpret, blah, blah, some, all that stuff. Here, this is all straightforward procedural sections. So that's why asking questions are also going to be very difficult if you're going to go for practical questions. The institute wants to ask very practical questions testing your logical abilities. Very difficult here because it's all straightforward. Yes, no, do it, don't do it, like that. The only area where they're going to test you again and again is whether it's a foreign company or not. So be careful there. This is another nice thing. Section 386, which is not the last section in this chapter, but the last section in the sections applicable to a foreign company. 380 to 386 apply to a foreign company, right? Both inclusive. This is 386. 386 sort of is an explanatory section. When you studied interpretation of statutes, they might have told you that there are certain sections, and within that section itself, there will be explanation. The idea is any word used in that set of sections or chapter or in that section may have a peculiar meaning only for that chapter or that section or whatever. So some words will be peculiarly defined. That definition, you cannot extrapolate it elsewhere, even within that enactment or elsewhere. But for that limited purpose of that section or for that set of sections or chapter, it will be applicable. So here the word certified is defined in section 386. Not only for this chapter, the word certified itself is being defined here. Certified means certified in the prescribed manner to be a true copy or a correct translation. Okay. So the idea is simple. You got a Japanese company or a French company, and the financial statements are in French, or whatever the document is in French. So you have to translate it into English language, which is the language acceptable in India other than the national language or the regional language. So who will do that? Who will do that certification? That is the question. So the place where the translation is done becomes very important. Is it done outside India or is it done in India? Okay. So outside India, then you should get it authenticated by the signature and the seal, if any. For example, in China and Korea, they have something called a chop. It's called a chop. In fact, even in many northern states, in India, they call it chop. So they won't say rubber stamp, they'll say chop. So the chop, it's actually a signature. The chop is a signature in China. So every Chinese official in those days under the emperors of China would have a chop. And that will be kept safely by him, like it's almost like a dongle. He has to keep it very safely. And whenever any document is to be authenticated by him, he'll put his chop on it. That's the seal. So shall be authenticated by the signature and the seal, if any, of the official having custody of the original. So suppose you are a foreign company and the original charter is with the company secretary, then that company secretary should sign. Whatever. Or, so the word used here is or. If that fellow is not willing to sign, then you have to get it signed by a notary of the country or part of the country where the company is incorporated. See, they are using words very carefully. Notary public of the country. So many countries, there is a common, rule. Or part of the country. For example, the United States of America, as I told you, every state has its own law. And notary publics are registered under the local state law. Whatever it is, suppose, that's why I said, suppose you are a Texas-based company. Then if you are a Texas-based company, we wouldn't have a problem because it will be in English and we have no problem with English. Suppose, okay, the language is different, then suppose a Chinese company with a Chinese documents are incorporated in the state of Texas, then sorry, you have to get it notarized by a Texan, a Texas-based notary public, not any other notary. This is very important in US, where it's not enough if you ask, are you a US company? You should also ask one more question. Which state are you from? Because sometimes the laws are different. Not that it's going to matter for me as an Indian citizen, but it's good to know which state they come from, is the point. Good. So a notary public of the country, a part of the country where the company is incorporated. Boss, it's so easy now. It's very costly. Try it. Even for incorporating a company in India, suppose I'm incorporating a company in India with foreign directors and a foreign company as a shareholder, believe me, for example, they have to provide all the proof of identity, right? Proof of identity, proof of address, all that is then a proof of residence and all. Everything, if it is in English, no problem. But if it is in fact, no, even if it is in English, if you want to incorporate it in India, they insist on notarization. Not only notarization, it should also be apostilled. APOSTILLE. APO, write it down. APOSTILLE. Apostille. Apostilling or apostilling. Now, so what, it's interesting concept. You should know this. In this context, it is not relevant. Here, in this context, for this section, not a problem. It is enough if the notary public signs it. But if you're going to incorporate a company in India with foreigners as directors or as, foreign citizens and all, etc., then it's not enough if the notary signs it. See what happens now? The Indian embassy should certify that this fellow is the notary. The Indian embassy in US should certify that this fellow is the recognized notary. That is called apostilling. So the notary will certify the document, then the Indian embassy will certify the notary. Apostilling is needed because that shows how much trust we have in each other's. Because somebody might have forged the notary's signature, so they want an Indian embassy to certify. Indian embassy can also notarize it. Indian embassy can also notarize it. The Indian ambassadors can also notarize it. Apostilling is also needed. Or else, if you don't have an embassy near you, then you have to go to the local authority and get it apostilled. After the notarization, you have to get it apostilled with the court. The local court will have an apostilling service where they will check their panel of notaries and then, Richard is a notary, so we'll sign it and they'll give you. That's a separate document. Where apostilling document will be on top of the document, notary ka signature, notary ka certificate, then the apostilling certificate. Together you have to everything. It's a pain. That's why when they come to me for incorporation and they ask me, Mr. Shrikant, when can we have the company incorporated? I'll say 60 days, 45 days to 60 days. Why so long? Why? Well, your government is telling it's going to be easy. So, boss, that same government, you have not dealt with it, I have dealt with it. I know how they behave. To you, they will say everything is possible. When they come, when I put the paper up only, the fellow, the clerk sitting there, the bureaucratic fellow will say, this is not right, that is not right, reject it. Then so I'll have to come back to you, you'll have to go. So I will do my best to see to it that all the documents are as per the rules. I will do my best. But inshallah, because ultimately our central government MCA, because I'm sorry not to say inshallah, of course, but this bureaucrat also is there, sitting there wasting everybody's time, asking for this, asking for that. And so that day I can't predict him. So I take 45. If you are willing for 45 to 60 days, Baba, we have a deal. Otherwise, please go to some other fellow who says he will do it in 15 days. If he is able to do it, my regards to that gentleman or lady. But this is because be pragmatic. And so sometimes they are not happy, but once they agree, and I finish it within 30 days or 15 days, 20 days, they're very happy. Because I told 60 days, and then how come? You are lucky, yaar. You are lucky. That's all. See, my Indian government, I only know, especially my Ministry of Corporate Affairs and their greatness, only I know about how they will irritate you. My income tax department, only I know how they will conduct faceless assessments and how they will, conduct proceedings. Only I know. Okay, so you will think that it is all online. Only I know how stupidly they will not take documents. They won't read what we are sending, pass a stupid order, and then we go on appeal. Appeal also faceless there. So appellate authority also will not read what we are telling. Wrongly, they will apply the law wrongly and pass an order. In spite of the assessing officer having committed an error, which is rectifiable under 154, and I would have preferred a 154 also, the appellate authority will blindly pass an order saying, not accepted. You will go to tribunal, and maybe in tribunal we get some justice. I'm not trying to complain about the law, about the legal structure in India, but I think it's stupid. I have a feeling that, this entire CAT appeals layer has to go. They serve no useful purpose, and they are only delaying the process and making us pay 20% and waste our money. Rather, the same 20% I pay, go to tribunal and and have a very good tribunal and give full access, and chartered accountants can argue anyway. Go there and argue and win the case. And why this CAT appeal one layer there? And they anyway delay. They don't pass the orders on time. Delay. So delayed justice is denied justice. Sorry for giving all these, shall we say, obiter dicta. Nothing connected with the topic, but say as a practitioner, we have certain pains. Tomorrow when you get into, and I'm sure many of you are aspirationally going to get into practice, these are the practical issues that you will face. Okay. So if this certification, if this translation has been done outside India by a foreign translator, then it should be authenticated by the official having custody of the original, or a notary public of the country or part of the country where the company is incorporated. Suppose it is done in India, then such translation shall be authenticated by an advocate, attorney, or pleader entitled to appear before any high court. So, an advocate, member of the Bar Council, can sign it or authenticate, or an affidavit of a competent person having, in the opinion of the registrar, an adequate knowledge of the language of the original and of English. This is what I said. Translator. They are called empaneled translators. Every embassy has an empaneled translator. For example, the French embassy will have an empaneled translator of French. So once you are on that panel, they will give you a license. That's all. Then you can authenticate. That is enough. Along with that, an affidavit by you that this is a fair and true and fair translation of the original into French, certified. So and so, French translator. Great. Okay. So if you're fluent in some language, then make money out of it. See, again, today we have reached a stage, my dear friends, where one single income is not enough. Or rather, it's becoming, with online, it's becoming easier for people to acquire new skills and, have multiple skills. So welcome to that new world where there's no specialization anymore. Everybody can do anything. Multi-skilling is going to be happening. So, that's where we are heading. Okay. So when people come and ask me, Mr. Srikanth, what should I specialize in? I can't help laughing at him. Boss, you are entering a world where nobody can specialize. Nobody can afford to specialize. You cannot have a silo where you sit and say, I can't go out of that. I am willing to go everywhere. Maybe I have some additional, shall we say, experiential or research-based knowledge in one particular area where I may be authority. But I will not lock myself there and say, I will not go anywhere else. So I will do other work also. What is there? If it comes my way and I am capable of doing it, I will do it. What is there? I will not lock myself in a silo and say, I am an expert in GST. Who says who's an expert here? Everybody is an expert. If you are a member of the institute, you are an expert. Okay, I am a specialist in GST. I will not do any other work. It is nothing but professional suicide. Don't even do that. Unless you have reached that stage where you are able to get a niche where you got sufficient income, which can help you, and this is a perennial source. Even then, I would say have one more option with you. Don't lock yourself into one specialization, and suppose that specialization becomes useless, then that's it. Your entire career comes to an end. Okay. See, these are all the practical things, that unfortunately, maybe as we become older and older, we see the world clearer and clearer from a higher position. But then, it will be very difficult for you to understand and accept it. Therefore, what is the only way out? You have to come all the way up to 50. But don't make the same mistakes that I did, is all I'm telling. Or learn from the positive things that some people did and maybe improve yourself. This is the best. I have done that. Whenever I see somebody who's smarter than me or successful, I go to them and ask them, hey, what did you do? What happened? What was the trigger that made you? If I think I can apply a couple of it in my life, I do it. What is wrong? Why feel, that why not is what I would feel. Anyway, the word director is specifically defined for this chapter. Director in relation to a foreign company. Please note, director in general is different. Here, for foreign company alone, they are saying director in relation to a foreign company includes any person in accordance with whose directions or instructions the board of directors of the company is accustomed to act. He may not be on the board. He may not be sitting on the board of directors of the foreign company. But if he is a person in accordance with whose directions or instructions the board of directors is accustomed to act. So this refers to a de facto director or deemed director who has no legal relationship as director but is able to influence the board. So one example is where the board consists of his or her nominees or even employees. This is an indirect method of control and see, believe me, on the face of it, I cannot find out. Yeah, suppose I'm seeing the memorandum and articles. I see only names of Mr. Donkey, Mr. Monkey. I don't know who they are. But behind Donkey and Monkey is the person. Donkey and Monkey listen to him. They are only nominees, chamchas. Okay? They will obey what this person is saying. Who is that person? How to find out? For that, there should be an investigation. If you remember, relate this to 216, investigation into the ownership of a company. So 216 is applicable to a foreign company also. So all the 228 says all the provisions of that chapter are applicable, including 216 of chapter 14. Okay. So this is the link between inspection and investigation and foreign company. Foreign company can also be investigated. We can try to find out, because see, tell you one thing. Suppose there is a smuggler or a narcotics operator and he's forming there are companies that do that. You form a company in Brunei, then that Brunei, of course, if you're doing it from Brunei, all the alerts will come out. So what we'll do is we'll form a company in Hong Kong, which is slightly safer. And then this Hong Kong fellow will try to set up a place of business in India, and they will do genuinely, they'll do some importing. Some genuine importing will happen. Some items will be imported, sold in India. Some business will be there, some accounts will be there, audit will be there. But in reality, what they are doing, they are using this import operation as a front for smuggling. Either smuggling gold or smuggling narcotics, okay, or whatever. And ultimately, it will all get into funding terrorist operation, whatever. So, in which case, that, believe me, that you mean to say, in that case, the real smuggler or the international crook who is sitting in Brunei or in Philadelphia will put his name in this memorandum? No way. There will be some donkey monkey will be sitting there, and that donkey monkey will simply be an employee or some nominee. The real fellow will be behind. Finding him is very difficult. It needs cooperation between investigator in India and an investigator in abroad. Possibly Interpol will have to come in, and so on and so forth. With all that we can find out, and we can link it. Suppose we are able to link it, and suppose one of these donkey or monkey, sort of succumbs under the questioning, and they agree, I will tell the truth, becomes an approver. Then you got your chance. So it is so difficult to find out. So don't think that it is matter of documentation. No way. You have to go beyond the documentation and ask. During the investigation, you will summon them and examine them on oath. While doing that examination on oath only, we will ask all these questions. For example, one of the questions to Mr. Donkey will be, Mr. Donkey, you have invested something like $200 million in this company. What is the source of your money? No, I can't answer that question. Like that, if he says, then we will say, okay, you are unable to explain. We will tax it as an income in India. Please pay the tax. No. I will tell you. So like this, the questioning will continue, right? So on and so forth. Foreign company, to the extent of Indian operation, very much liable for tax in India, subject to double taxation avoidance agreement, if any. Subject to DTA. So we'll have to examine the DTA and see what it says. And believe me, already section 9 is there. The main section is there. Deeming to accrue or arise in India. Clearly, if you've got a business connection in India, pay the tax in India and stay away. So there where there's a business connection, it's a different story altogether. But still, DTA has to be verified for this purpose. Right? Anyway. I'm just only trying not to confuse you, but to help you understand the overall, shall we say, links between the several parts of our knowledge base. Okay, it's a whole system, and we should know the connection between its several parts. If you don't know the connections and you don't know how to make it, you will be a brilliant chartered accountant who cleared the exam with an all India rank. But as a senior employee in the finance department of a large corporation, or as a member in practice advising companies and individuals, a little bit you will be having problems. Okay, so here's a practice question. Qinghai Huading Industrial Company, incorporated in China, established a place of business at Mumbai. Fantastic. The charter documents constituting the company is in Mandarin Chinese. So Chinese, there are a lot of dialects of Chinese. You got Mandarin, you got Cantonese. Okay, so Mandarin is superior. Like, for example, Persian or, Awadh ka Hindi hai na, Lucknow ka Hindi hai na, that is superior, right? I mean, that's what I've been told by people from Lucknow, that the language, the Hindi that is spoken in Awadh or in Lucknow is the superior version of Hindi. It has a lot of Persian in it, and the words are very just as So this Mandarin is supposed to be a superior dialect of Chinese, as against Cantonese and all, okay, which are sort of colloquial. Now, so this is in Mandarin Chinese, and so this is required inter alia to file a certified translation of the above documents with the Registrar of Companies in India, who can authenticate the translated charter documents under the Companies Act, okay, if the translation is made at Mumbai. So, friends, the minute you see this type of question, you would cut to the chase and ask, where is the translation made? India or China? Oh, it's Mumbai, India. Then, straight away you write this. That's all. Answer is over. This is the answer. Straight away. Suppose this question carries how many marks? 2 marks here. If you write this, okay, then you will get 1.5 marks. Don't ask me, why they are not giving 2 for 2. Don't give. 1.5 is good enough here. Almost 75% of the marks. See, when you are answering questions, I will always have like a run rate. I'll have a mark counter, and I'll also have a run rate. So whenever I was writing professional exams, 3 hours I've got, I'm like a batsman enter the pitch. So I need to score here. Every ball I have to score. If I don't score, why am I playing that ball? I'm not here to play that game. Because every ball, minimum I have to take 2 runs out of it. Ideally, boundary 6. So like that, you have to keep tracking your every answer. You should be able to track and ensure that, which means if you're wasting time on a question, every additional minute that you're writing beyond the allotted time, you are not getting marks for it. Your run rate is falling. So that's why you fix the time for a question. Whatever you want to write within that time. Go to the next question, because next question, the chances are you will get more marks, additional. Whereas here, this extra 5 minutes is not going to get you more marks on this question. Whereas go to the next sub question or next question, again you will get some marks for it. Now, this is a very, very, shall we say, practical approach. I've always used 32 times. I've used it in, and of course, I'm an rank holder, and that's not the point. The point here is it works, and you get more marks. So that intelligent student who's got prepared well and written well, he or she walking out of the, exam hall, conservatively can tell how much they will get. Conservatively, they can tell. Means when I got something like 68 in auditing, when I wrote that auditing paper and came out, I did a study. I myself I thought 57, 50 plus, 55. 68 was a bonus. But the point I'm making is conservatively, we will know where we are. If we should know where we are. That if you are so well prepared, if all these complicated questions you're asking, all these doubts you're having now, if such a person prepared so deeply goes to the exam and writes it 100%, when they walk out of the exam hall, they should know conservatively how much they will get for the paper. This is something important. And I do that every time I write the exam. Before I throw the question paper, I make out a conservative estimate of my marks, and I'm okay, 40. Sometimes I'll be very worried, 40, 42, but that's okay. I have a feeling I will clear that paper like that. Maybe in the exam, see, conservatism. So in the exam, I notice that my estimate will be easily 5 marks lower than what I get. Because I would sometimes, even when I have a small doubt also, I won't give myself marks for that question. Like that, I will go. Okay. And I will answer all the questions. I will answer all the questions. If you leave out one question in the exam, you are not going to get marks for it. If you write 3-4 lines, out of pity, that man may give you 1 mark. Yeah, that 1 mark is a 1 mark. Pass 1 mark money. If you are struggling for even passing that paper, imagine that 1 mark. Instead of wasting your time on another, write all the. Some people come and say, "Sir, I left out 2 questions." You have created your own coffin. Okay, your own grave you are digging. Don't do that. Answer all the questions. Answer 100 marks. Chances are you'll get 50. If you answer for 80, tell me how you will get. That 20 marks is gone. Yeah. Okay. So always answer. Allot time for every. Even if you don't. Sir, when I don't know about what is the answer, when I have not studied it, what do I do? Hey, you have some common sense now. Use it. Think about what that type is. And then some knowledge, something, write 5 lines. Yeah. Write something about it. Write 5 lines. Just at least 1 mark. Absolutely. For example, when I was looking at getting 60 plus and all, okay, with my own knowledge, I've come up to 55. Now, if I answer something, I get 2 marks. Now, my journey from 55 to 60 happens. Or journey from 35 to 45, 42 happens. This is the strategy of good, intelligent students in exam hall. Okay. Even if you're not studied, or maybe the institute, very sadistically and venomously, they took a topic which is very remote area. No, you didn't study that well. So Srikan has also did not teach it properly. Finally, what to do? You are there in the battlefield. You have to fight. Okay. So while you are there, think what I am telling now. Write something. You mean to say you can't even understand what the question is. Something you write. Of course, the examiner will know that you are bullshitting. But by then you would have written a good paper. Now, the remaining questions you would have written beautiful answers, right? So, see, examiners are human beings. That is why multiple choice, it's a computer. Computer has no emotion, feeling, and all. But examiner is a human being, psychological being, having feelings, preferences, love, affection. Such a person, make him your friend. That's all. Write in such a way that the first 5 questions, he is impressed. Then, even when you're getting into these bullshit areas, he will smile and he'll say, "Chalo, Mary beti, mera beta, I will take care." He will put 2 marks, 1 mark. Whatever he can do, he will do. Charitably, he will do. That will push you further. Okay. This is what shall I say? I know maybe I'm exceeding my limit as a teacher here by giving you all these tips and all that. But anyway, these are all secrets, that nobody will reveal to you. I should not be revealing to you these secrets, but anyway, take it. If you can, I am 100% sure. Merely because I told it, people are not going to follow it. You will still say, "No, sir, it is not correct, sir. It is not possible, sir." Like that. Hello, how can I help you? But if you are a positive thinker, if you believe what I say, then you will take it up and you will get marks. Anyway, so now we come to a topic called issue of prospectus by companies incorporated or to be incorporated outside India. Friends, India was a closed economy till 1990. Just give you a background on this. India was a closed economy till 1990. We were following, rightly or wrongly, wrongly, misguidedly. Okay, why is it rightly or wrongly? Wrongly, because of certain unfortunate, ideological belief systems that were foolishly supported. When the world was broken up into, post World War II, Germany was destroyed. Europe itself was destroyed. What was left was Soviet Russia and US, of course. These 2 fellows became the, big boys in the yard. And they fought with each other. And most countries had either had to go this way or that way. So either you said, I'm a capitalist country like Thailand and all, they went this side. They said US come, they allowed US to set up bases in their country and they gave full freedom to US. They benefited whatever, Malaysia, Thailand, Indonesia, they went that route in this part. But some countries prefer to get into communist part. So they said no, like Cuba, communist. They are communist. We support Russia. Okay. And in many countries, like in Africa, there was a fight between these two guys in those countries. So America and Russia were fighting their battles elsewhere, like say in Vietnam or Korea. America and Russia were fighting. So what was India doing at this time? Sitting on the wall. Sitting on the wall. We said we are non-aligned. Pakistan, Bangladesh, Sri Lanka, India, all of us said we are non-aligned. We are neither communist nor capitalist. We are neither for you nor for him, which was a good political policy. But economically, it was disastrous because we were not able to get any support from either of these countries, except, of course, Russia and East Germany sort of helped us, but they themselves were weak and we lost out, which meant till 1990, we were following a policy called socialism, which was most foolish approach to economics. But then in 1991, we opened up our economy. Thanks to the same, the guy, Dr. Manmohan Singh, he decided to make India open up through, because of economic compulsions, not political compulsion. It was economic compulsions. Economically, we were out. Okay, so at that point in time, maybe more about it when somebody is teaching FEMA, because this has a lot of reference in FEMA. The FERA to FEMA translation happened because of this. The FERA to FEMA translation happened because of this. And so we said we are opening up, which meant we are going to permit more companies to come to India and set up place of business. Also, we will give them access to India as a market, and so on and so forth. But still, our policy framework was not so good that we were willing to allow our citizens to take money out of India without control. But we welcomed them to come to India, right? Now, which meant what? Initially, we were encouraging what were known as GDRs, Global Depository Receipts, Indian company going abroad and sourcing money from foreign investors. But then it's a double-edged sword, right? Somewhere in the international monetary and financial arena, they would have said, look here, you can't only come to us and take money here. We also want to come to your country and use it as a marketplace for mobilizing capital. So finally, I'm connecting to this point. Don't think, why is this fellow giving such a big story? The story is to connect here. So earlier, so many Indian companies, even in the 90s, early stages of liberalization and all, they were going abroad and getting, shall we say, investments in the form of global depository receipts designated in US dollars or in Euro bond, Yankee bond, like that. And the foreign, say, for example, the US citizens or even European citizens will buy it in US dollar. Not the currency is okay. I will float a euro, I will float a Yankee bond in Europe. Geography. But the idea is they may want to diversify their currency risk, so they will buy a Yankee bond from an Indian company. Okay. Finally, the repayment of that bond will be in dollar, and the half-yearly interest payment will be in dollar through a depository and all that. The point here is that was allowed. So Indian companies were being outside India, but they also said, we want to come to India. So we facilitated that and we said, okay, you want to come to India? Then you also come. You promote you issue a prospectus and collect money from my Indians. If my Indians are willing to invest, good. So this sections 387 to 389 apply to issue, circulation or distribution of prospectus by companies incorporated or to be incorporated outside India. To be incorporated. So even a to be incorporated company can issue a prospectus. They can say, we are going to incorporate this company and we are going to raise funds. We want so much. And they will give the background of that company. Now, whether the company has or has not established or when formed will or will not establish a place of business in India, which means 380 to 386 apply only to foreign companies falling within the definition having place of business in India. Whereas 387 to 389 apply to any company incorporated or to be incorporated outside India, irrespective of whether that company has or has not established any place of business in India, even if it will not, even if after the incorporation it is not going to establish in India, still, so such a company which has not established a place of business in India is not a foreign company. Still, 387 to 389 will apply to that company, provided it wants to issue or circulate or distribute a prospectus in India. So prospectus is a very important document, because using the prospectus, you are going to collect money, right? See, since I'm sure most of you are bullish on cryptocurrency, and my comments about cryptocurrency may not be seen as popular. Of course, I like to be unpopular, because every time I was unpopular, I was successful. Every time I predicted that the market has overpriced itself and it's going to collapse, I was unpopular. But I sold, and then the market collapsed. I became rich. Every time I found the market was dead low and down and out, I said, please buy shares. Now is the time. I was unpopular. People refused to believe me. They angry with me. They shout at me. They say, Srikanth, you are an idiot. But I buy. I became rich. So I like to be unpopular, because every time I'm unpopular, I either don't lose money or I become rich. So in the case of cryptos, I may not become rich by my unpopularity, but I will definitely not lose my hard-earned money. That's the point. Having said that, I'll tell you the point. Now, when somebody is subscribing to cryptocurrency, are they getting all the information that they need? Because strictly if it is a security or even a mutual fund unit, the issue document will be vetted by SEBI. And only factual statements can go there. You can't make all this, it's a technology-driven, this blockchain, whatever it is, you have to explain it in so many terms. What are you, how many, everything. So all that control is not there now on this fellows, right? That is the problem. Whereas once they come through a prospectus, disclosures are there, including very clear disclosure that it is risky and that volatility is high, so on and so forth. I mean, I'm not trying to say, I'm saying such controls are not there on this product. It is not a currency. First of all, crypto is not a currency. It is a financial product like any other product. So if I'm investing in a mutual fund, I can look at the offer document by the mutual fund company, see the background, track record, so many things I can do. Who is the owner, who is controlling, whether they are run by any company, if so, how much investment they have made in their own group, so much information I can get from the issue document. Yeah. Where do I get all this for a cryptocurrency? Okay. Except for all this hype and all this nonsense in the websites, there is no official source for me to officially satisfy myself, right? This is my complaint about crypto. It is not a currency. First of all, cryptocurrency is not a currency. That's why they are using it's a digital asset. Okay, it is a digital asset, virtual digital asset, whatever digital asset, whatever you call it, whatever it is a financial product here. Okay. There should be a disclosure. That is, the government of India, the Ministry of Finance should come out with guidelines on that. They should say, if you want to float cryptocurrency in India, you should give these disclosures, these details, and then only based on that investment will be made. When they start doing that, they will not. Or by the time they start doing that, the collapse will happen. Or they will start doing that, by then another 6 months, collapse. The cryptocurrency will collapse. Okay. Now, having said this, though possibly not palatable or popular statement, Kumar, Udit, you are very interested in cryptocurrency, I can see. There is a distinction between fiat currency and non-fiat currency. So when the government comes, see, I'm not against digital currency, ma. Please, I'm not against digital currency. Don't get me wrong. I'm not a Neanderthal that I cannot understand where the financial markets are heading. 100% paper currency is going to have a life of its own and it's going to die. I agree with you. If that is what you're trying to justify, I'm totally with you. But digital currency, absolutely, so long as it is backed by a sovereign guarantee. See, suppose the government is issuing digital currency, I'm very happy about it. Because my government is, see, instead of, hey, there it's only a payment mechanism. Today I go to again, please take out your, sorry, I know they're getting into possibly an unrelated discussion. I think I got some time on my hand, I can do that. See, the point here is, and after all, I'm a member of the institute and you are potential members. The logical thinking is the hallmark of a chartered accountant. Let me teach you how it works. I'm against cryptocurrency. Why? Because look at the 500 rupee note in your wallet, or a 200 rupee note in your wallet, or a 100 rupee note in your wallet. Look at it. You will see that there is a promise there. From who? From the RBI governor. I promise to pay the bearer, blah, blah, blah. The RBI governor will sign it. Tell me, in cryptocurrency, who is giving that promise? Whereas, the minute I go for a government digital currency, believe me, there will be such a contract between the government and its citizens to uphold its currency. In that, government should protect itself. Either they will have gold or they will have some other method or they will control inflation. Whatever they do, they should ensure that their currency is strong. This is done by governments for its fiat currency. This is called fiat currency. Now, if a fiat currency is going to move from physical form to digital form, I'm all for it. I have nothing against it because there it's, and moreover, you can't buy and sell your own currency, nobody will buy rupee bahas, whereas you are buying cryptocurrency. Please understand, it's a technical fact. So that is my view. So digital currency, welcome. But cryptocurrency, all the best. All the best. Okay, moving on. Thank you, Udit, for accepting or rather confirming that. Okay, good. I think welcome digital currency. Already many countries are experimenting with digital currency. Boss, today we are already using some kind of digital currency when you use GPay and stuff like that. See, today when you buy a gold in e-gold, you are not actually holding the physical gold. You are actually holding it as a virtual asset. Same thing will happen for digital currency also. Instead, I will not have printed currency here. But to make printed, every adopts digital currency, we have to elect Mr. Modi ji again 1 more 5-year term. Only then he will be able to do that. That's the only way out. Force you to use it, like demon. No more physical currency. If you want to make, or maybe physical currency only up to 100 rupees. Beyond that, if you want to make a payment, only digital currency. All that, there will be a governmental control on this. The sovereign will control. Fiat currency, digital currency, I have no problem. But crypto. Equating cryptocurrency with the fiat currency and digital currency is the mistake we are doing. We are equating them and then treating cryptocurrency. It's like we are taking a good boy and allowing him to mingle with the bad boy. And whenever something is said about the bad boy by people like me, immediately you will tell, sir, that good boy is there. No, he both are together now. So it is also good boy only. This fellow is a bad boy. If you want to have good boys, good. But don't combine these two fellows and treat them equally is what I'm saying. Anyway, see this view on cryptocurrency, I'm going to keep on expressing it in all public forums everywhere till people either I'm arrested for whatever they are going to say or whatever, but I will do it because I consider it to be my social duty to warn people not to invest in cryptocurrency. Even if you're making a lot of money. I know today many people will say, sir, I made 5 lakhs, I made 10 lakhs. Baba, this is the beginning. This is the beginning of the beginning. Okay. Anyway, coming to the prospectus. Now, the rules relating to prospectus issued by a company incorporated outside India is contained in this particular provision where we say the prospectus shall be dated and signed and shall contain particulars with respect to the prescribed matters. Don't worry what it is. Every form of application for securities of such a company or intended company shall accompanied by a copy of a prospectus. Similar to prospectus, suppose if you remember what you studied in your intermediate on prospectus, you might have seen a similar section 26 you would have studied where they would have said every application form for securities should be accompanied by either a prospectus or an abridged prospectus. Okay. So here this prospectus, the format is given in section 387. It should comply with chapter 22, this chapter. Now, the genuine exception, in 26 also you will find this exception, here also. A bona fide invitation to a person to enter into an underwriting agreement. See, the underwriter is not applying for shares. He is only guaranteeing. He is saying, in case shares are not applied for, I will take it. So, a genuine underwriting agreement is an exception. Where the prospectus includes a statement purporting to be made by an expert. The expert shall give his written consent and should not have withdrawn it before the delivery of prospectus. 388. Boss, all this is similar to normal prospectus only. Same, 28. Like that. Okay. A statement regarding obtention of written consent of expert and its non-withdrawal shall be included in the prospectus. A copy of such prospectus certified by the chairperson of the company and 2 other directors of the company as having been approved by resolution of the managing body has been delivered. So the prospectus should be approved by the foreign board and 2 directors of the company should sign it, and chairperson and 2 should sign it. 389. So all the stringent rules applicable to a prospectus issued by an Indian company are made applicable to a prospectus issued by a company incorporated outside India. This is to prevent fly-by-night operators who will simply come, give some document to the Indian public, take money and go away. So any such document where you are trying to create securities and sell them to Indians should comply with the format. All these uncomfortable questions we'll ask you, like give us your 3 years financial statement. You made loss, disclose it. You get it audited by an Indian auditor, okay, and see to it that it's complying with Ind AS. Oh, okay, then you can't do all sorts of nonsense in those cases. Okay. The prospectus shall state on the face of it that a copy has been so delivered and there is endorsed on or attached to the copy any consent to the issue of the prospectus under 388 from an expert. So all this should be clearly documented, right? These are the points to be included in the prospectus. See, here we saw the prescribed matters. So these are the matters. Just to quickly take you through it, it's purely procedural. So you should have the instrument constituting or defining the constitution, the enactment under which you are incorporated, address in India where these documents can be inspected in English or a translation in English, the date on which and the country in which the company would be or was incorporated. Why they say would be? Because even a company to be incorporated can go in this. Whether the company has established a place of business in India. See, this is optional. If you are establishing, mention. If you're not going to establish also, no problem. See, you can issue a prospectus, take the money and see, as of now, the problem is not MCA. MCA has given you enough and more provisions to do it. Today, the problem is FEMA. Under the Foreign Exchange Management Act, there are restrictions on what a person in outside India, a company incorporated outside India can do in India. So FEMA is the issue now. FEMA slowly they'll open up. See, for example, you as an Indian citizen today can invest in foreign mutual funds, which are investing in foreign companies. Yes. Small beginning. Like that you can go. Small beginning. You can start making portfolio investments in a foreign country. Under the scheme, you can do it. You are entitled to take it. So you have to be careful. Right. State the matters specified under section 26. Do you remember? Certain other matters which are to be stated in prospectus, they are there in 26. That will also be applicable here. You need not know what the matters are. Not knowing those matters is not a crime because intermediate you have cleared. So you should only know that matters specified under section 26 not covered here should also be covered. For example, any agreement with the director should be disclosed. Terms and conditions should be made known. All that is in 26 now, that will come here. So, any consent to the issue of the prospectus required from any person as an expert, these are to be attached to the prospectus. Copy of contracts for appointment of MD or manager. And in case of contract not reduced into writing, a memorandum giving terms and conditions, the particulars. This is what I said. It's part of 26. Not here. It's not in this list. But it is in 26. So you have to give details of the contract and a copy of the contract also to be given. A copy of any other material contracts, which is not entered in the ordinary course of business, entered within preceding 2 years. Some peculiar contracts, like say for purchase of land or construction of building and all, give it. So you know what you are doing here. So idea is disclosure and transparency. That's the bottom line of prospectus is disclosure, transparency. So that if after reading a prospectus and with all the information available, if a man purchases a share and something happens, nobody is liable. But if the prospectus has a misstatement or a concealment, then it's a different thing. A copy of underwriting agreement or a copy of the power of attorney if prospectus is signed through a duly authorized agent of directors, then that power of attorney should be given. The provisions of section 387 shall not apply to issue of prospectus to existing members, for example, a rights issue, or issue of prospectus which are to be in all respects uniform with the existing shares being quoted or dealt with on a recognized stock exchange. Friends, you already got equity shares. You went for an IPO. That first IPO ka prospectus governed by 386, right? Sorry, 387, governed by 387, read with section 26. Subsequently, when you're going for further public offer, then 387 will not apply, but SEBI will control you. Don't worry. The entire top notch will be with SEBI. SEBI will control you. For further public offers and all, SEBI will control. So no problem. But at the time of listing, what you're doing, 387 will apply. Okay. Similarly, when you're going for a rights issue to your existing shareholders, then 387 will not apply. So this exception is there in 26 also. This is almost parallel to section 26. Suppose, see, they are saying any application form should contain a prospectus or include a prospectus. Suppose you take a signature from the applicant saying, I am aware of it, but I don't want the prospectus. I'm happy that even though there is no prospectus, I'm okay. Or I'm okay if you are not giving me these details. Like that, if he gives an exemption to you, that won't be valid, shall be void. See, that shows the type of trust our government has on our Indian public. They are so confident that these fellows are bakras, that they will give such signatures also. I don't want any protection. Even if you don't provide the copy of notice of any contract, etc., I am okay. Our man is willing to sign that and invest money in that company. Even if he signs, such waiver shall be void and the company will be liable. Okay. So, this, to my knowledge, is not there in your syllabus. IDR is not covered, but I've just given it here. I'll be sharing this today with you through the portal. If you want, you read it. IDRs are reverse of GDR. That's all you should know. GDR is when an Indian company goes abroad and issues securities in foreign currency, right? IDR is a foreign company comes to India through a domestic depository and issues securities in India by way of IDR, Indian Deposit Receipts, right? In India, in Indian currency. That's all. Okay. This is already governed by FDA rules also. FEMA is also there. But as of now, it is not in your syllabus. And to answer a broader question, practical question, I'm not aware of any companies that issue IDR. Foreign company, I'm not aware. If you know something, I'm ready to be enlightened. So, yeah. Friends, I think we are having easily another 25 minutes. If you have any other questions also, you can ask me. Other than this topic, if you have any other questions, if you are listening in, if you are hooked onto this session, and you are having some other topic or question also, you can ask me now. So I got some easily about 15 minutes spare time will be there. 10 minutes spare time will be there. In case you want to ask any question outside of this topic, maybe this topic, sir, it's fairly simple. I'm not having any doubt. I agree. But outside of this, if you want, especially topics taught by me earlier, if you want to ask, feel free to use the query pad to get yourself a clarification. The provisions of sections 34 to 36, both inclusive, means 34 to 36 of the Companies Act, both inclusive, shall apply to the issue of a prospectus by a company incorporated outside India under section 389, as they apply to prospectus issued by an Indian company. Also, it will apply to issue of IDR by a foreign company. Simple. 34 to 36, 34, 35, 36 deal with criminal liability and civil liability and punishment for fraudulently inducing persons to invest money. So, this is covered there. I'm not going to waste your time there. Basically, there's a criminal liability under 34, civil liability. There is any person who lost money. By what the name of issue, there was a misstatement. Mr. A invested in that company. Subsequently, company was wound up. A lost his money. Then he can file a suit from the directors, etc., for who are liable for misstatement. Now, they will be liable to compensate. Okay. And 36 is again a criminal punishment. 447, it will be punished under that section for fraudulently inducing persons to invest money. Fraudulently. Wantedly, you are defrauding, telling false statements with the intention to make them invest their money. Yeah. See, a foreign company is not a company. Shall I repeat this? A foreign company is not a company. It is only a body corporate. So, winding up provisions apply to companies. So, if whatever you studied as under the chapter 20 dealing with winding up applies to companies incorporated in India. Now, 376, they are trying to introduce, okay, which speaks about power to wind up foreign companies, although dissolved. Right? So, a foreign company has been carrying on business in India. It has ceased to carry on the business in India. So, its Indian operations have come to an end. Now, such a body incorporated outside India may be wound up as an unregistered company under this part. See, this concept of unregistered company is peculiarly Indian because in our Indian, shall we say, laws, we have allowed this firm category to survive. This firm, not LLP. LLP can be LLP wound up under the LLP Act. Firm, normal firm, which is coming under the Partnership Act. We have allowed this fellow to survive because there are so many entities that are firms. For example, I myself have about 10 clients who are still partnerships and their turnover is more than 100 crores. Turnover is more than 100 crores. They are still firm. They have not corporated themselves or LLP. Still firm. Whenever I tell them, boss, you convert yourself, they are, no. They are happy because they don't need to go outside for money. They're profitable businesses. Owners are very rich. They are happy. They're investing their own money. In many cases, they pay on the due date. They don't delay. So they are saying, why should I get into hassles of company? I'm happy where I am. Just audit my accounts, tax audit, IT return, you file. Whatever fees you want, we'll give you. We are happy. So I also say, chalo, that's what you want. That's what you want. But suppose there is a firm. It's going to be dissolved. Now, such a firm, if they want to get into the winding up process, then they can declare themselves as an unregistered company and be wound up under Chapter 20 as an unregistered company. Okay, that's for information. That is an Indian firm. Firm in India can do this. Then all the rules applicable to dissolution, winding up, especially the payment, who will get paid, statutory dues, all those rules will apply to this winding up as an unregistered company. But, so here they are saying, suppose you are having a company incorporated outside India, just carrying on business in India, it's ceasing to operate in India. Then this Indian operation can be wound up as an unregistered company, even though the actual body corporate has been dissolved in that country, or it has ceased to exist in that country. To the extent of the Indian operations, you can still go for winding up provisions. The reason is simple. See, that company is dissolved there, and they say, hey, that company is dissolved, so we are not liable. The Indian government is saying, look here, to the extent of the Indian operations, you are still liable. The rules relating to winding up will apply to you, including if there is any fraud in the formation or management of the company, then the directors are liable to the shareholders, to the Indian public. So they want to protect Indian creditors and shareholders. That's the point. Subject to this section, the provisions of Chapter 20 dealing with winding up shall apply mutatis mutandis to the closure of the place of business of a foreign company in India as if it were a company incorporated in India. So when I'm closing the Indian operations, it should be treated as if I'm winding up this company. In case such foreign company has raised monies through offer or issue of securities under this chapter which have not been repaid or redeemed. Let's make a distinction between the two paragraphs. First paragraph, any body corporate incorporated outside India, you are not carrying on this business in India, then you can be owned up as an unregistered company, even though the original body corporate has been dissolved in that country. Over. Now, this is another example. This foreign company, okay, foreign company, please note the difference. Body corporate, incorporated in India, here foreign company. This fellow has set up a place of business in India. Also, he has raised money through offer or issue of securities. Then, the complete chapter 20 dealing with winding up will apply to this fellow. Because Indian public have invested shares, Indian public may have purchased debentures, taken debentures. So, all the rules of winding up will apply. The idea is to protect the Indian creditors and shareholders, right, who have given some money to this company. I think this is a very powerful section and I think it's a good one, right? Ronnie Coleman Limited, a foreign company, failed to deliver some documents to the Register of Companies as required under Section 380 of the Companies Act 2013. What are the penalties? I'm just giving this question because, okay, since I have a little time, and earlier I have been asked to share one thing. See, Namita ji, welcome. Class is here. Okay, I'll answer your 379 question a little later. Okay, and I think this question was raised earlier also, but chalo, no problem. I will again take it up because I love to answer questions raised by Ms. Namita Goyal. She has raised so many complicated questions that sometimes I find it very difficult to answer them, but not this one. I will answer it. Other people also can put up questions because we'll finish it and go there. Yeah. Now, while I'm here, let me tell you, in the company law paper in our exam, there are basically three types of questions. First category of question is theory question. I call it as a pure theory question. Means like this. This is a classic example of a theory question. State the provisions of penalty prescribed under the Act, which can, actually this is not a straight theory question. Straight theory question they don't ask you. For example, a straight theory question would be, what are the documents to be filed by a foreign company incorporated or a foreign company under the Companies Act 2013? This is a straight theory question. Believe me, Institute will not ask the straight theory question anymore. But there is one more question called theory question disguised as a problem. See, this is one example of that. Not theory, pure theory. That's pure theory is straight away like BCom question or BCom level question, what are the grounds on which a company can be wound up? That is a pure theory question. State the grounds on which a company can be wound up. It's a pure theory BCom level question. Whereas in our institute, they won't ask like that. Impossible. In the final exam, no way. Okay. Instead, they will ask you a theory question disguised as a problem. See, for example, here simply they are telling Ronnie Coleman Limited, a foreign company, failed to deliver some documents to registered companies, blah, blah, blah. That first part is only a description, yeah. Idea is to make it a little more practical. But bottom line, what is the question? State the provisions of penalty prescribed under the Act, which can be levied on Ronnie Coleman Limited for its failure to deliver. So this is basically a theory question. What are the penalty provisions under the Act for failure by a foreign company to deliver documents required to be delivered? Instead of asking it straight theory, they are disguising it as a problem and asking you. Answer is a theoretical answer. Don't waste your time. Ronnie company, a foreign company should have delivered fail. Chalo, they have not delivered, yeah. That's the end of story. Now, what is the penalty? This is the answer. A foreign company which has not, the answer should be like this. Ronnie Coleman Limited, a foreign company which has failed to deliver some documents to the register under Section 380 shall be liable to penalty as follows. 1. The company itself will be liable for a fine of minimum 1 lakh to a maximum of 3 lakhs. In case of a continuing offense, 40,000 per day. Officer is in default, so and so. That's all. Over. Suppose 2 marks. 2 marks. How much you're going to write for 2 marks? Not Ramayana and Mahabharata. For 2 marks, that's all. Write this and get out. For that, they will give you 1.5. 1 mark, 1.5 they'll give for 2. If the examiner is in a good mood and you have impressed him beautifully with your handwriting and your style and all, chalo, 2 marks. Actually, answering questions that have smaller value marks makes sense. Because for a 2 mark question, if somebody answers almost correctly, they can't reduce too much marks. In fact, if the examiner is in a good mood and his wife has not shouted at him and she has given him coffee exactly in the right way he wants, strong coffee, filter coffee, then he will give you 2 marks also. So that way answer questions which have smaller marks like 2, 3 and all. Rather than take one question that has 5 marks or 6 marks, because there he can be stingy. Instead of giving you 4 on 6, he can give you 3 on 6. Depends. So just a strategy. Finally, you have the third type of question, which is pure problem, where they will give you a situation and you will have to apply the law. Wherein the question also will be like that. If you read the final question, it won't be theoretical. They'll ask you, should so-and-so do like this or advise so-and-so like that? Then it is clearly a problem. In which case, there is one approach that I'm going to tell you. I hope I have time. Yes, I have time. I will tell you. It's a 4-step process. First, represent the facts. Whatever facts are stated, represent it, restate it, frame it correctly. Believe me, my dear friends, meaning in language, any language, meaning is based on context and framing. If you frame it correctly, the other person will understand better. If you don't know how to frame it, then you're out. So this point is what shall I say? You write the facts again. Then you write the law. The actual provision of law which is applicable to it. You should prove to the examiner that you know the law. Then even if you derive a wrong conclusion or a conclusion, still you will get 50% of the marks. Why? Because you wrote the law. You are aware of the law, but the way you applied the law, maybe due to some reasoning, more intelligent, then you will apply wrongly and you got it wrong. No problem. Then the third part is apply the law to the fact. In view of section so-and-so above, Mr. So-and-so company is advised, blah, blah, blah. Your argument and all will come here. It's like a legal argument. It's like a case. I'm arguing before court. I will give all my arguments here. If I have 2 views, I will give 2 views here. Why not? And finally, the answer to the question will be the conclusion. Because in that question, they will ask, is the appointment of the director valid? No, the answer should come here. Therefore, in view of the above discussion, appointment of Mr. A as a director is not valid or valid, whatever. If you write in this structured manner, believe me, you will get 80% of the marks allotted for the question. 80% you will get it. So 6, it's about 6, then you will get 5 marks out of 6. Okay. Again, many of you are far more intelligent than me. And a little bit, what I'm telling you, don't mistake me. Okay. I'm sure you got better methods. I'm sure you're all brilliant. But, this Buddha is having some background. With that, I'm trying to tell you this. Okay. Chalo, moving on. Validity of contracts is possibly the last section. Namitaji, I'll come to your question finally. Don't worry. Don't get impatient. There's an answer to your question. I'll come to that. Okay. Now, see, this is nothing but doctrine of indoor management. Suppose a company fails to comply with section chapter 22, a foreign company, this will not affect the validity of any contract. For example, the foreign company might not have filed certain documents. It is liable for penalty and all. Doesn't mean that they are not liable for any contract entered into by this company. The third party is protected. Doctrine of indoor management. See, an innocent third party who entered into a contract with this company, honestly believing, okay, that procedures have been done correctly or that the forms have been filed correctly, is protected. The contract cannot be questioned by this company on the grounds that, our procedure for registration as a foreign company has been done wrongly. So we are sorry, we are not bound on this contract. No, any contract entered into by in India is bound, or any contract you are bound. The third party is not affected. But once the company is aware, the company shall not be entitled to bring any suit or any set off or make any counterclaim or any legal proceeding in respect of such contract or transaction until the company has complied with the provisions. See, A is entering into a contract with ABC LLC, Dubai-based company. Okay. Now the company has not complied with some provisions of Chapter 22. Chalo. Now there is a breach of contract by the company ABC Dubai LLC. Now the third party who is entering into the contract with this company can file a suit. ABC cannot say we are not compliant with Chapter 22, blah, blah. They say no. The suit will go on as if it's valid. But suppose the breach is by the third party. Suppose the breach of contract is by the third party. Now, ABC LLC cannot bring a suit until they have complied with the provisions of this chapter. The idea is to protect innocent third parties who are entering into contracts with foreign companies. It's nothing but doctrine of indoor management in statutory form. That's all. And of course, it doesn't protect the company. A defaulting company cannot file a suit because you make good your default and then come, is what they will say. So the first thing defense in the court, the first thing the advocate will come and the opposite advocate will say, so and so company is not filed the papers. This suit is not admissible, Your Honor. End of story. Go finish it and come, then file again. Go. That's all. Okay. The central government has the power to exempt any class of foreign companies or companies incorporated or not. And I think, so I don't know if this is the question Madam is asking about in 377A, 379A also, they're asking here also. See, basically this laying before both the houses of parliament is, notification is different. Notification is informing the citizens of the country. Please understand the difference between notification. Notification is public information of a government action to the citizens of the country, right? Against that notification, you have the right to go on a writ. In case there is no appellate provision in that statute, then you have right to go on a writ. But in the meantime, the members of parliament, who are they, They are the representatives of the people, right? So when this notification is presented to those members, they have the right to discuss it in parliament, including they have the right to make negative comments. They can even make comment about it, which is not acceptable to the Prime Minister. And if they make it in the well of parliament, they are protected by privilege, absolute privilege, and they can be reported in the press. See, normally if you want to make a statement, no, you should be supported by facts. Simply you cannot. For example, this notification is given by the Prime Minister for the purpose of supporting a few corporate cronies. Like that, no, you can make a comment in parliament. You can't do that outside the parliament. Inside the parliament, the MP can do it. Opposite MP can do it. And he can be reported in the press so that there will be wider publicity to the matter, so that at least the citizens of the country will be aware, hey, there is some problem in this matter, whatever it is. Okay, so that is why we are laying it before both the houses of parliament to give the opportunity to the representatives of the people to discuss it threadbare. And then, even then, if it is passed as a law, at least these comments will go into the record of the parliamentary proceedings. Okay, so that is the purpose. I hope, Namita ji, you got the answer. If I know convincing Namita is very, very difficult, but if she is convinced, I would love to have her confirm that she is convinced. Okay, another question. Oh, wow, I have opened the floodgate of questions from Namita. Sir, in section 186, also loan to directors being given as in clarification, the employees not include directors, means loans can be given to him. See, the 186 talks about all persons, including employees. Okay, there's a nice article also. I will try to send it across, but it's included. 186 includes employees also. It talks about any person. Okay. See, sorry, 186 is for intercorporate loans and investments. 185 will apply, na? Okay, when you are giving loans to employees, I'm not really answering what you're saying. Section 186 also loan to directors can be given. Yes. Which director? Director of a company in which this company is having a shareholding and all. Read 186 properly. Okay. Director may be an employee. If a director employee is governed by 186. Employee simplicity is not governed anywhere. 185, 186, nowhere. Okay. So, employees not include directors. Yeah, but I think you are getting confused. Madam, why it is not included there? Because if the director is an employee director, he is governed under 185 anyway. Therefore, 186 is not governing. Please understand. Suppose the director is an employee director, then he is not, this is not governed in 186, it's governed in 185. Because he is a director, it is governed in 185. No. So, idea is you cannot give it. What the point is, this subject is not dealt with by 186, it is dealt with by 185. And you have to comply with 185, not 186. That is all. Okay. One more thing, 186 is not a permission to give a loan. 186 is a section that restricts the right to give a loan. So your term that, loan can be given under section 186. No, madam. Loan can be given subject to section 186 or subject to section 185. It is not as if 186 is permitting you to give a loan. Giving a loan is already permitted in the Articles of Association. That power is restricted by 186 and 185. To the extent of an employee director, it will come under 185 and not under 186. That's all. Got it? Also, 186 deals with persons also. For example, you may give a guarantee or a security in connection with a loan made by any other person to the company or to any other person by the company. In those cases, that person includes employee also. That person includes employers. Okay. For example, if this company is giving a guarantee to a housing finance corporation for a loan taken by an employee, it's governed under 186, not under 185. But 185 employee director is governed under 185. Okay. If a foreign company invests in an Indian company by purchasing all the shares which are already in the business in India, then how will we deal with that? Because all the reporting can be changed from India. If a foreign company invests in an Indian company, so about whom are we talking? The Indian company or the foreign company? Because there is nothing connecting the foreign company with the Indian government. This chapter does not apply to that foreign company. Because what it has done, it has merely invested in the share capital of an Indian company. That's all. That will not make it liable to under this section. Please note. See this first exception. Reverse also is true, na? Suppose all the shareholders of a foreign company are Indians, still that foreign company is not, still that company incorporated outside India is not a foreign company. Correct? All the shareholders are Indians. Similarly, if all the shareholders of an Indian company are foreigners and the foreign company is holding 100%, still that foreign company is not bound by this chapter. Right? Indian company is bound by the normal Indian law. Yeah? Whatever is applicable to the company in India will be applicable. Reporting requirements will not change. Yeah? Maybe you will want to relook at your own knowledge base on this. Your statement that because all the reporting requirements may change from an Indian company to foreign company is not correct. If a foreign company invests in an Indian company, 100% subsidiary, you are talking about a 100% Indian subsidiary of a foreign company which is doing business, then how will we deal with that? It will be dealt with under FEMA. This is a foreign direct investment provision. The FDI norms will have to be complied with. Then this will become 100% holding company. That's all. This Indian subsidiary will be Indian subsidiary only. So Indian law will be applicable. Foreign company, I cannot do anything. Okay, that foreign company will consolidate, if at all. That's all. If at all this Indian company is investing in a foreign company, then that foreign company will become a subsidiary and I have to consolidate it here. The reverse is possible. But if the foreign company is investing 100, I don't think that company will become a foreign company. Okay. Yeah, see, okay, loan can be given to any person, right? That is why they are very specifically saying employees will be governed by 185 and not here. That's all. It answers your own question. Okay, good. Fantastic. I had a wonderful session with you all as usual. And we have also come to the end of my delivery. We will be meeting again and again. Don't worry. This is not the last class now. 3 more classes are there. I'll do it. Before I conclude, one small suggestion. Don't break your head. Float. Look at the logic. Try to understand. Don't complicate yourself. Institute will not complicate so much as you are complicating the provisions to yourself. Okay. Just say know the provision, know the principle behind the provision, and then try to understand it. Automatically things will fall in place. Okay. 185 and 186 are not meant to govern loans to employees. They are meant to prevent companies from siphoning funds out through the vehicle of loans to directors and related companies. That is the purpose of 185 and 186. Go by that logic, things will fall in place very, very clearly. Okay. Thank you. Wishing you all the very best.